All right. Very good morning to all the future CMAs. Very good morning. Good morning, all the CMA final students. And yes, I love to interact with CMA final students because you are the future of our profession. Yes, just one step to go, and you will prefix CMA before your name. That is why I love to address all my CMA final students. So once just confirm, guys, am I audible and visible to you? Am I audible and visible to you? Please confirm. Am I audible and visible to you? Are you able to hear me properly? Are you able to see me properly? All the CMA students from across the country who have their examination, the final examination in the coming week. And yes, by say August 2022, you will become CMAs, professionals. You'll be called as professionals. You'll no more be a student. You will be a professional after August 2022. Of course, if you are giving both the groups, and if you are giving only fourth group, then one more group to go and you'll become professionals after that. So yes, good morning everyone. Good morning Ashwin. Good morning Swati. Good morning Niranjani. Good morning Rijin. Good morning Sushmita, Sangeeta, Saurabh, Rishita, Vivek. Good morning everyone. Vidya, Shreyansh, Satya, Suresh, Rajula. Good morning everyone. And yes, today we are going to start our marathon of cost and management audit. The theoretical portions is what we are going to touch base today. All right. So I would just like to highlight which all study notes are we going to cover in today's marathon. And guys, the total marks which will be in your hands after today's marathon will be approximately 30 marks. Approximately 30 marks will come from this particular theoretical portion which I'm going to cover today. So this is your study material, okay? And we are going to cover the study notes, theoretical study notes of your syllabus. Let me mark them for your ready reference. All right. Study note number 9 we are going to cover today. No, not study note number 9. Yes, 10. Study note number 10 we are going to cover today. Study note number 10 we are going to cover today. Study note number 11 we are going to cover today. Study note number 12 we are going to cover today. Study note number 13 we are going to cover today. Study note number 14 we are going to cover today. That's it. So 10, 11, 12, 13, 14, 5 study notes we are going to cover today. Study note number 10 to study note number 14 we are going to cover today. 10 study notes. And guys, in all these study notes are theoretical study notes, and they will command about 30 marks in your examination. About 30 marks will come from these 5 study notes which we are going to cover today. If you are referring to my Cost and Management Audit book, if you are referring to my book, then chapter number 8, chapter number 9, chapter number 10, these are the 3 chapters which will summarize today's discussion for all of us. So yes, today is a theoretical a marathon which we are taking. So obviously your question will be, sir, what about the practical portions? You have not taken marathon of practical portions, guys. Those who are not aware, I know most of you must be aware, marathon of basic and cost and management audit is already saved on my playlist in my YouTube channel. Study note number 2 already saved marathon on my study note on my playlist. Cost audit documentation already there in my study in my channel. Cost auditor professional ethics already marathon is there on the YouTube channel. Overview of cost accounting standards till cost accounting standard 4 I have covered the portion in my marathon videos. So all these marathon are already available on my YouTube channel, and if you are not aware where to look for these videos, let me share my screen with you and let me share the place where marathons are already situated, because many of you are telling me, sir, when will you give us marathon of cost and management audit? Guys, cost and management audit marathon is already live on my YouTube channel. Please go to the playlist. This is the YouTube channel which all of you love. Because of your love and affection, we have been scaled this YouTube channel to a very high level. So yes, this is the YouTube channel. And if you go towards the end of this YouTube channel, in the playlist, you'll get a playlist of CMA Final Cost and Management Audit. Please see this playlist. You have to click on this playlist. or you have to just click on view the full playlist. Okay, view full playlist, then you will be able to view full playlist. Okay, this is the playlist of cost and management audit. And guys, if you scroll down, these are the marathons of the practical portions of your syllabus, whereby I've covered maximum of the practical portions of your syllabus in these marathons. Please look at this. Company rules 2014. Okay, these are again company rules 2014, again part 2, part 1 and part 2. Okay, then one very important thing, guys, these two videos, important amendments in cost audit, the two videos, the important amendments in cost audit videos, these two videos are very, very important from an exam standpoint. Please go through these two videos very well. Important amendments in cost audit, this is relevant for June 2022 and December 2022 attempt. So go through these two videos. Then we have cost accounting standard 4, which I've discussed in details, and 7, which I've discussed in detail. Then rules part 2, cost audit program, professional ethics, cost accounting standards, cost audit basic concepts. Then the strategy video, most important video that you need today is the strategy video. Please go through this strategy video in detail, because in this strategy video I've told you how to study in the last few days of your examination, how to focus on the important points. So do take note of this strategy video of cost and management audit. Please see this strategy video along with all the marathon videos which are already saved on my YouTube channel. So yes, marathon of cost and management audit has been live for a long time now. It's not today that I'm taking the first live session. The live session I've taken earlier also for these cost auditing, for the cost and management audit subject. Please share these videos with all your friends who are giving examination in the forthcoming examination, so that they also benefit from these marathon videos. All right, so now we're going to start the marathon of theoretical portion of cost and management audit. Mind it, this theoretical portion is going to fetch you 30 marks. Full 30 marks will be yours if you watch this marathon video completely. If you just focus on this marathon video, then 30 marks will be yours. Yes, you will be able to score 30 marks. So we'll be starting the first chapter for attaining these 30 marks. All right, let's start the marathon session. Yes, sir. So how's the Josh in the house? Please tell me, how's the Josh? In the chat box, I want the answer. How's the Josh? In the chat box, are we all excited for this marathon videos and to score 30 plus marks in theoretical portion of cost and management audit? Are we excited? Are we excited enough? Please answer in the chat box. Are we excited to score good marks? How's the Josh in the room? That's what I want to know. How's the Josh, guys? All right. Hi. Everyone is saying hi. Okay, all right. Everyone is excited about it. Piyush, Shrikant, Shreyansh, Manish, Jyoti, Vivek, Shushmita, Saurabh, Suresh, Ram, Mansi. Brilliant, guys. Brilliant. Superb. All right. So let's start the marathon video of cost and management audit theoretical concepts. And we are starting with the concepts. All right. Before we start the concepts, let me just send you the link whereby you can access these PDFs. Okay. These PDFs you can access using a link. I'm just sharing a link with all of you. Please use this link to access the PDFs which I'm going to share right now. Okay. I'm just sending you the link in the chat box, as well as I'll save it in the description box also. Both the places I will save this link. Yes, sir. All right, here you go. I've uploaded the PDFs on the Google Drive, and I'll be sharing the link with all of you. Yes, uploaded. Done. All right. Okay. Guys, please check the message box. Please check the message box. I have typed the link of the Google Drive in the chat box. Please let me know if you have received that Google Drive link. That link will contain the PDFs which I'm discussing in the class, this PDFs will be available to you in that Google Drive link. You can download this PDF. You can even take a printout of this PDF to revise the entire theoretical portion of 30 marks of your syllabus. So these PDFs will be very, very, very useful to all of you. Also, in the description box, I'm saving the link of this PDF. That also I'm doing right now. I'm doing it so that you don't face any problem in accessing these PDF files, because PDF files are really, really important. So I'm saving the PDF files in the description box. Okay, in the description box, I'll be saving these PDF files for all of you. Just give me a second and I'll be saving it in the description box. Yes. So guys, I have saved the Google Drive link in the description box. You can access the video, the PDF files from the Google Drive link. You can access it, you can print it, you can do whatever you want to do with these PDF files. You can share with your friends. So all of you have received the PDF also. PDF is available on the chat box. I have sent the PDF. Then I've sent the PDF in the description box also. I've saved the PDF. So yes, PDF is now available with all of you. Now let us start the marathon lecture of Cost and Management Audit, the theoretical portion. All right. So the first topic which we are going to start today in our marathon lecture is basics of management audit. Basics of management audit. So before coming on to the basics of management audit, I want you to understand, what do you mean by management audit? What is the meaning of management audit? Guys, meaning of management audit is that, the management of the organization takes various decisions for welfare of the organization. These decisions which are taken for welfare of the organizations, it is to be made sure that these decisions are taken correctly. Obviously, there is never a management which can take 100% decisions to the best of its ability, and there is no management in the world that can ensure that we will take 100% decisions absolutely correct. There is no management in the world. You take management of Reliance Industries Limited. Do you think that the board of directors decision is always correct? No, guys. Their decisions are also only 80% times correct. 20% times their decisions are incorrect. So no management in the world can take 100% correct decisions. But now the catch is that the management should not also be such that their, say, 60% decisions are incorrect. That's an absolutely unacceptable norm. If a management's out of 10, 8 decisions are incorrect, then there's a serious concern with that particular management. So what do you mean by management audit? Management audit means that we are going to appraise, we are going to audit the decision-making capability of management, and we are going to see where is the management going wrong. Why is the decision matrix of management of a particular company not going the way we want it to go? Why are they making wrong decisions? Why is company into losses? Why is company categorized as a sick company? All these things we need to analyze using the simple technique of management audit. Now guys, one thing which we should remember about management audit is that management audit is not a statutory audit. It's not an audit which is required to be done by law. It is not a statutory audit. The management audit, the people who are conducting management audit, they might or might not do management audit. Management audit is absolutely voluntary. What triggers management audit? Guys, mostly the shareholders of the company, they want to get management audit done of their board of directors, because shareholders are concerned that board of directors should make absolutely perfect decisions. Now, to make those perfect decisions, if the board of directors are not making perfect decision, then shareholders sometimes force management audit on the board of directors. This is what is the usual phenomena. So owners of the company want to know why board of directors are taking wrong decisions. Why are things not going the right way? And that is the reason why management audit emanates. So two important points which are important to be noted over here is, number one, management audit is non-statutory, which means it is not related to any statute. It is not governed by any law. Any Companies Act, any Income Tax Act doesn't mandatorily requires anyone to get management audit done. So management audit is non-statutory. It is a voluntary audit. If you want to do. If you don't want to do, no one will force you to get your management audit done. So that is the first point. So first of all, let's see what is the definition of management audit, and it has recurred many times in the examination also. Management is the process of appraising the performance of the directors. So the directors of the company, their performance is to be appraised. Appraised means what? Appraised means assessed. We need to assess the performance of the directors, managers, or in other words, appraising the performance of the management of the company. If we are going to assess the performance of the management of the company, the top management or the middle level management of the company, we are going to appraise the performance of the top level management or middle level management of the company. That is known as management audit. We are appraising, we are analyzing, we are scrutinizing, we are assessing the management of the company. We are assessing the decision making capabilities of management, top level management of the company. It attempts to look into all aspects of management performance. So wherever management is performing, whatever performance management is giving, management audit tends to challenge or tends to audit that particular area. For example, management is involved in production process. Management is involved in decision making with respect to the distribution process and everything. So all those areas are bound to get audited. We want to know whether our management is taking right decisions or not. That is the ultimate objective of management audit. It does not concentrate on financial matters alone. Guys, financial audit is only bothered about financial statements. Cost audit is only bothered about cost statements. Secretarial audit is only bothered about secretarial records. But management audit is not only focused on financial matters, it is focused on non-financial matters also. So, a very simple example which comes to my mind. Management audit will also have a section which will describe whether management of the company treats the employee in a good way or not. Whether the employees are treated in a good way or whether the employees are not treated in a good way in the organization. What is the behavior of the top management towards the employees of the company? That is also an important aspect of management audit. So effectiveness of management, how effective is our management? That is the point under consideration under management audit. Controlling the total activities of the organization in accomplishment of organizational objectives. So whatever are the objectives of the organization, those objectives should be fulfilled at the end of the day. Now, can you see a strange picture on your screen? Can you see a strange picture on your screen? Please tell me in the chat box, what do you see on your screen? What is this strange picture on your screen? Can you tell me? What is this picture on your screen? Tell me, what is this picture on your screen? What do you see on your screen? What is it? Please tell me. What is this picture? Please tell me in the chat box. In the chat box, please tell me, what picture is this? In the chat box, I want to know, what is this picture? Oh, good. Honeycomb, yes. Beehive, yes. Beehive, absolutely right. Sushmita is right. Beehive, yes. Yes, right. Beehive, honeycomb, okay. Beehive, okay. Great. Now, please tell me. You are absolutely right. Now, please tell me, if you touch this beehive, or you throw a stone on this beehive, can you see how many bees are there in this beehive? Yes, a lot of bees are there in this beehive. Now, my question to you is, if I pick up a stone and hit this beehive, or not even pick up a stone and hit it, even if I go near to this beehive and try to touch it, I'm not trying to hit it, I'm just trying to touch it, what will happen to me? In the chat box, what will happen to me? What will happen to me? Damyanti, Vidya, Moshmi, Pramod Jadhav, Jyoti, Shrikant, Vivek Lambate, Sangeeta, Shreyansh, Naga, Saurabh. Please tell me what will happen to me if I will try to touch this beehive or I will throw a stone on this beehive. What will happen to me? Severely hurt. Become a potato, sir. Ram is saying, sir, you will become a potato. Sushmita is saying, severely hurt. Shamli is saying, you will be hurt. We don't want to imagine, sir. Jyoti is saying, we don't want to imagine. Don't even dare. Sharon is saying, inject it. Saurav is saying, inject it. Yes, guys, you are absolutely right. If we even try to touch this beehive, it will be harmful for us. It will be very, very, very harmful for us, because beehive is not the thing where you should touch upon. Beehive is not a thing which you should even come closer to. It is even unimaginable. Okay, you're absolutely right. Similarly, guys, management audit is like touching a beehive. Top management of the company are typically the top notch people, the top shots of the company, and they are very, very strong and powerful people who have been in the company for a very long time. So if an external auditor comes to the company and he tries to do management audit, and he tries to challenge the power and authority of the top management of the company, then then this activity should be done in a very, very careful manner, because it can also backfire. It can also backfire. They are very strong people. Management of the company are very strong people. If you do not have adequate supportings to your observations, if you're just making observations, management decision making is bad. If you're just making observations without any supporting examples or supporting documentation, it might backfire. It might backlash. Therefore, one thing which you really need to understand while you are doing management audit is that please be very, very careful in doing management audit. Please be very, very careful, because the top management might not like someone else challenging their authority, someone else challenging their decision making capabilities. So management audit is to be done in a very, very a sound manner. There should be adequate backup of everything which you speak. Whatever you are writing in your management audit report, you should have backup of everything. You should there is no statutory guidelines for conduct of this audit, so there is no methodology for conducting this audit, but the riskiness is very, very high on this particular kind of audits, because it might backfire. It might backfire. You are almost trying to touch this beehive. Doing management audit is almost like touching this beehive. So be very, very careful in doing management audit in any organization. That was the message which I wanted to give using this beehive. Okay, sir, got it. Now, what is the coverage of management audit? What all areas should management auditors see? Guys, there is no limit to the areas which management auditor should see. In case of financial audit, they only see balance sheet, profit and loss account, statutory compliances. They might see your vouchers, they might see your fixed assets, inventory, etc., etc. That's it. Everything centered around the financials of the particular company is the focus of financial audit. If you move to cost audit, that they only see your cost records, like your cost sheet, your cost statements, your reconciliation between costing profits and financial profits. That is all which a cost auditor would want to see in your books of accounts. If you move to secretarial audit, they only want to see your secretarial records. If you move to tax audit, they only want to see your tax records. But in case of management audit, there is no restriction on what a management audit can see. He can look at anything and everything, including whatever things I've just told you: financials, costing records, secretarial records. They can see anything and everything. So right from the organization, the people of the organization, administration of the organization, manufacturing function, marketing function, finance function, research function, development function, any function can be seen by the management auditor. Guys, I was very privileged to see one of the management audit reports of a particular company. Okay, and there was a very peculiar observation in that particular management audit report. What was that observation? I'll tell you the observation in a very, very brief manner. Observation was that the guards of the company are saying that when in the morning, the owners or the board of directors, when they visit the company, we give them a salute, but they never salute us back. They never acknowledge our salute. So this was the acknowledgement. This was a mention in one of the management audit reports which I had seen long, long back. And yes, this is an evidence that management audit is not a restrictive audit. It is a full-blown audit which can have anything and everything in its purview. Nothing is away from management auditor's purview. Management audit has a very wide scope. It can see anything and everything. Even the emotions and feelings of the guards of the company were also recorded in the management audit report. So, right from administration, manufacturing, marketing, finance, anything can be looked at by the management auditor. The audit is expected to cover every activity of the organization undertaken in pursuance of organizational objectives, policies decided by the board of directors from time to time. So whatever policies and practices are decided by the board of directors, all those policies, whether they are being fulfilled on time or not, and in principle or not. This is the sole focus of the management auditors. The various plans prepared by the management, its policies, programs, procedures, their audit is management audit. So whatever policies, programs, procedures are prepared by the management, entire thing will be audited by the management auditor. So guys, these are the functions which can be audited by the management auditor. Now guys, I'll tell you one very practical insight about management audit. Usually during one management audit, the management auditor picks up certain parts of these functions. It is not possible to cover all the functions in one management audit. So they would, in consultation with the shareholders, would pick up certain parts and they would focus their audit on those parts in phase 1. Then they will come back next year, and next year they will focus on the rest of the parts. So they split their work because the scope is so wide that it's not possible to cover entire organizations, each of the departments working together. So they split their work. So management audits purview is always restricted to whatever has been agreed with the management of the company. That is why the scope can be curtailed for the phase 1. It can happen in phases, in various phases. So this is the concept of management audit. Now, one very important theory of agency. Theory of agency. That agency theory is applicable to management audit as well. Now, sir, what is this agency theory and why is it applicable to management audit? I'll tell you the agency theory using a simple chart. Please see this chart which is there on your screen. And yes, this chart is there on the Google Drive. The link is given in the description box. Please go to the description box. Please go to the Google Drive. Download these entire PDF notes. I made them available to all of you for your quick reference. All right. This is the agency theory. Agency theory means what? Agency theory means if you have shareholders, so there are shareholders of a company, there are directors of the company, and they are managing the company. So this is the company. Okay. So the shareholders have appointed the directors to perform management of the company. So principal and the shareholders and the directors have got an agency relationship. Shareholders and directors have got an agency relationship, which means what? Which means that the directors are the agents of the shareholders. The directors are fulfilling the objectives which shareholders want to fulfill. So directors are the agents of the shareholders. This is the agency principle. So shareholders would ask the directors to do some work. What is that work? Managing the company. So directors are accountable to the shareholders. Shareholders are the principal and director is the agent of that principal. So director is not functioning independently. Director is functioning on the instructions of their principal, which is the shareholder. This is the concept of agency theory. Now guys, same theory is applicable on management audit. It's also. So the management auditors are the agent of the shareholders. And the objective of management audit is to ensure that the directors are taking decisions appropriately and suitably. So the management auditors are also nothing but the agents of the shareholders. And since there's an agency relationship between shareholders and the directors, this agency relationship is actually requiring the shareholders to vouch for the performance of the directors. Directors wants to the shareholders want to assess the performance of the directors, and shareholders are appointing the management auditors to assess the performance of the directors of the company. So this agency relationship which is there between the shareholders and the directors, this agency relationship triggers the management audit. So what is the basis of management audit? This is this agency relationship between shareholders and the directors. Since shareholders are directing the directors to do certain things as their agents, they want to appraise their performance also. A management audit is a way to appraise performance of the directors of the company. So it says an agency in broad terms is any relationship between two parties in which one is the agent and other is the principal, and the agent represents the principals on a day-to-day transactions. The principals or the principal have hired the agent to perform service on their behalf. Most commonly, that relationship is one between shareholders or stakeholders as principals and company executives as agents. So who are the principals? Shareholders are the principals. Who are the agents? Company executives means board of directors are the agents of that particular principal. Principal is the shareholders. Management audit extends the examination of accountability between management and others at a large. Audit mechanism ensures this accountability. So the directors, I've told you in my earlier diagram. Please see this diagram again. Please see this diagram again. Directors are accountable to the shareholders. Directors are accountable to the shareholders. Now, this accountability is to be tested whether directors are performing work to the best of their abilities or not. And this testing will be done by management audit. Since shareholders want to know whether directors are performing their work to the best of ability or not, therefore they hire management auditors. Since directors are accountable to principal who are the shareholders, shareholder cannot analyze all the decisions of the directors very well, so they hire management auditors who are the experts in this particular area. So this is the backbone of management audit. Agency theory, agency principle is the backbone of management audit. Now, what are the objectives of management audit? What are the broad targets or broad aims that we are wanting to see in the management audit? That is what we are going to see now. All right. Screen is not clearly visible. Is my screen clearly visible? Someone is saying screen is not clearly visible. I can see the screen clearly visible, guys. I don't see any problem. Please let me know if there's any problem in the screen. Okay. Now, what are the objectives of management audit? What is management audit focuses on? What are the aims which management audit tries to accomplish? Obviously, the first aim is to appraise the performance of the management. The words that I am highlighting, those words are very, very important from an exam standpoint also, guys. So appraise the performance of the management. What do you mean by appraise? Appraise means assess. Appraise means assess or to analyze. So the first objective of management audit is to analyze the performance of the management of the company. And who gets this analysis done? The shareholders gets this analysis done. That is the first objective of management audit. We want to know whether the performance of the management is appropriate or not. Second, it highlights the decisions and activities that are not in conformity with the organization objectives. So we want to know what are the decisions which board of directors have taken which goes against the overall objectives of the organization. What are the decisions which management has taken which goes against the objectives of the organization? And we want to know the reasons for those decisions. So if any decision is made against the company, why is just that decision made by the board of directors? That is what we want to know. So we want to highlight what are the decisions that are against the goals of the company, because the ultimate objective is to attain or obtain the goals of the company. Why are board of directors making such decisions which are going against the company? We want to know that. Ascertain that objectives are properly understood at all levels. So we want to know whether the objectives of the company, which have been clearly stated by the shareholders, whether those objectives are being fulfilled or not, whether those objectives are being understood by the management or not. Because, shareholders do not want profit maximization. Shareholders want long-term growth, and board of directors are working towards profit maximization. Although both of them are working for betterment of the company, but the goals are not aligned. The goals are not aligned. So the management should be aware. The management should know what are the goals which they need to pursue. If management are not aware about the goals which they need to pursue, then guys, there is a problem. So the management should understand the goals. Number 3, ascertain the controls provided at different levels are adequate, effective in accomplishing management objectives or plans of operations. So guys, yesterday in the yesterday's live session, I discussed in details about internal controls. You had studied internal controls in your intermediate as well. Control means how do we make sure that our objectives, management objectives, are fulfilled. We need to have some checks and balances in the organization, because organization is so big that management cannot itself come to check each and every transaction. So all the transactions should be auto checked. It should be an auto check model. So controls should be such that they ensure that management objectives are fulfilled. For example, management wants to ensure that there is no leakage of inventory. When it moves out of the company, it should be properly recorded. No one should steal. Sometimes employee steals the inventory. They sell it outside. Sometimes this happens in many companies. So management wants to ensure that this doesn't happen. So what are the controls which we will put? We will ensure that whatever material goes out of the company's gate, there should be a CCTV camera which captures each and every material. Who is taking that material out? Whether he has taken authority to take that material out or not. Whether he has entered in the gate outward register about these material or not. Everything should be controlled. So control should be very much in place. Evaluate plans which are projected to meet objectives. So the management auditor should see what are the plans which the board of directors have made to achieve the objectives. And if those plans are not good enough, then management auditor can tell the shareholders to change the plans. So what are the plans which the management has to obtain the objectives? They are also analyzed by the management auditor. Review the company's organization structure. That is assignment of duties and responsibility and delegation of authority. Very, very, very important point, guys. Usually, when a company has a very heavy organization structure, then management becomes difficult. So there are various verticals. MD sitting on the top, and there are several juniors to MD. Then there are several other juniors to MD. Then there are hierarchy, which is very lengthy hierarchy. Guys, the hierarchy which is very lengthy hierarchy, or if there are multiple companies, subsidiaries and step subsidiaries, and further subsidiaries, if there are hierarchy which is very lengthy hierarchy, then guys, that will definitely that will negatively affect the organization. So the management auditor should review the company's organization structure. Organization structure should be perfect. Organization structure should be absolutely correct in respect of the company. Organization structure can be reviewed by the management auditor. Then optimum utilization of resources. This should be analyzed by the management auditor. Man, machine, methods, money, material, everything should be optimally utilized. Nothing should be wasted. This should be analyzed by the management auditor. Then to highlight the efficiencies in objectives, policies, procedures, and planning. So whatever efficiencies can be gathered in objectives, policies, procedures, planning, whatever we can do efficiently, whatever work we can do efficiently in the objectives, whatever changes we can make to make our objectives, policies, procedure more efficient, management auditor should highlight. To suggest improvement in methods of operations. So if there's any operation which is carried on, and there can be some improvement in that particular operation which can reduce the cost or increase the revenue, this should be highlighted by the management auditor. To highlight weak links in the organization structure, whatever is the weak link in organization structure, whatever is weakness in the organization structure or internal control system, any weakness in the internal control system, that should be highlighted by the management auditor. Now I'll give you a very interesting an example about internal control system, which I usually give in the examination also to make you understand what is internal control system. Okay, so I want 2 volunteers. First volunteer is Saurabh Mukherjee, okay, and second volunteer is Sushmita Roy. Okay, Saurabh Mukherjee and Sushmita Roy. Okay, I have 2 students, Saurabh and Sushmita. Okay, now Saurabh and Sushmita are hypothetically in relationship with each other. Okay, and Sushmita is is aware that Saurabh is taking coaching classes of CMA in particular institute. Now Saurabh goes away from home at 7:30 in the morning, reaches the institute at 8 o'clock in the morning, and then he stays in the institute till 4 o'clock in the evening, reaches back at 5 o'clock at his home. This is the usual the tenure or the usual life of Saurabh. Now Sushmita is a little skeptical. Sushmita is a little little bothered about why such a long period of coaching is there for Saurabh. Okay, so what does Sushmita do? Sushmita would call up sister of Saurabh early in the morning, 7:30, and ensure that yes, Saurabh has moved out of the home. So yes, sister confirms to Sushmita that yes, Saurabh has moved out of the home. Then Sushmita will call up the reception of the coaching institute and will make sure that Saurabh has reached the institute, the coaching institute. Yes, Saurabh has reached the coaching institute after a point in time. Okay, then when Saurabh moves out of the coaching institute, then Sushmita will again call up the coaching institute, will ask the coaching institute people whether Saurabh has moved out. The coaching institute people will say yes, Saurabh has moved out. Then after half an hour or 45 minutes, she will call sister of Saurabh to ensure that Saurabh has reached home. Okay, So guys, this is an audit which is done by Sushmita of the activities of Saurabh. But Sushmita has not done complete checking. She has only done control testing. So whatever are the major controls, she has tested those major controls. That's it. She has not done complete checking. What if Saurabh has bribed her sister? Saurabh has bribed the receptionist, and Saurabh has bribed both of them. And Saurabh has committed that he will give Dairy Milk Silk to both of them if they lie to Sushmita. This can very much happen. The controls can go for a toss. Control can be lost. So what should Sushmita do to attain absolute assurance? What should Sushmita do? Sushmita should hire a private detective who can follow Saurabh in each of the classes, who can sit inside the classes and observe the activities of Saurabh. That is not control testing. That is complete checking of the transaction. So there are two ways primarily where audit is done. Number one is control testing. We test that controls are working fine, and if controls are working fine, then we are reasonably sure that the entire transaction is working fine. That is method number one. And method number two is a detailed analysis or scrutiny of a particular transaction. Method number two is much more expensive. Method number two is much more time taking. Therefore, that method is taken only for key or important areas. It is not taken for all the areas. So control testing, internal control testing is one of the major things that is being checked by the management, or that all the controls are working fine. Management should not bribe those control keepers to his favor. Management should not do that. Okay. So these are known as internal controls, and internal control system should work perfectly, because we can test internal controls more for more number of transactions as compared to checking the entire transaction. We cannot do that. So management auditor will ensure that internal control system is working fine, and management is not lapsing the internal controls. Management is not removing the internal controls. This will be ensured by the management auditor. So internal control should be working fine. To suggest management by providing health indicators and help prevent sickness or help cure in case of sickness. So if company is moving towards sickness means situation where the net worth of the company is less and the accumulated losses of the company is more. This is the situation where the company is said to be sick company. Sick company means where net worth is less, net worth of the company is less, and the losses of the company is more. In those situations, the company is said to be a sick company. Okay. So management auditor can suggest ways of treating this sickness. Management auditor is like a doctor. He's a doctor of management. Okay. He can tell you that for this particular sickness, you can take certain step to remove sickness. So this sickness can be treated by the management auditor. So it helps prevent sickness, helps cure in case of sickness, to anticipate problems and suggest remedies to solve them. Whatever problems can arise in a particular management, that can be analyzed by the management auditor, and management auditor can suggest the ways to improve those problems also. So these are the objectives of management audit. Management audit wants to pursue these objectives. Now, what are the needs or benefits of management audit? What benefits can be expected out of management audit? Guys, not a different concept. The objectives can turn into benefits. Okay, please be a little smart in studying theory. Okay, the objectives can only lead to needs or benefits. These are not two separate topics. Okay. Number one, it helps management in framing basic policies of the organization and to define objectives. Two simple things. Management auditor will tell you that you have this problem, your objectives are faulty, please redefine your objectives. You will redefine your objectives, you will redefine your basic policies. Management auditor will help you in doing that. Number two, management audit helps in preparing a viable and achievable plan. So if your plan is faulty, if your plan is not directed towards the objectives of the organization, management auditor will help you to recreate that plan or to realign that plan according to your organizational objectives. Third, it helps in setting organizational framework to implement the plans. So the management auditor can also help you to implement the plan, how to successfully channelize the plan or implement the plan. That will also be taken care of by the management auditor. A management auditor can help you in designing the systems and procedures so that your work is not affected. So to design the procedures and systems, what system should be followed in production process, what system should be followed in distribution process, or what system should be followed in collection process of the money collection process. What should be the money collection process? All these things will be now taken care of by the management auditor. So management auditor is a multifaceted person, guys. He will help you in many things. In your plans, in your execution, everything will be taken care of by the management auditor. It helps in designing and reviewing the management information system. So management information system is the digital system, guys, which gives appropriate information to the management. So if suppose management wants to know what are the sales for the period of June 2022, management information system will give the sales. So management information system is designed in such a way that it helps management in taking relevant decisions, and it gives information to the management of the company. It helps in coordination, motivation, and control of the operations. It assists in SWOT analysis. So management audit also helps in SWOT analysis: strength, weakness, opportunities, and threats. These will be analyzed by the management of the company if management audit is required to be done. It helps government in identifying improper or wasteful use of funds. So improper or wasteful use of funds will be treated if the funds are being wasted, if the funds are being misused by the company, then those funds will be that check will be done by the management auditor. So management auditor can also be hired by the government of the India. Okay, so government can have some mismanagement within itself. Government companies like PSUs can hire management auditor to ensure that the funds are not wasted, to check extravagant organization practices. If organization practices are too extravagant, they are spending huge amounts in unnecessary things. All these things can be checked by the government of India through management auditors. Okay, because guys, in government organization, you must have heard that spending is lavish. They don't bother about spending money. They don't feel pain in spending money because it's people's money, right? So management order can help in curb the wasteful use of funds, curbing inefficient use of physical resources. So the management order can also curb inefficient use of physical resources, especially in public accounts. Then Indian financial institutions, banks, Board of Industrial Financial Reconstruction (BIFR) have found management audit useful in monitoring sick industrial units and to help units in their rehabilitation. So now, what is the use of Indian financial institution or banks or Board of Industrial Financial Reconstruction organizations? These organizations are targeting the sick companies in India, and they help them in terms of monetary benefits, in terms of management related guidance. They help them to achieve their desired targets. So there are sick companies which are loss making companies. The management auditor can help them in reviving their sickness and making them profitable again. And who will make them revive? The Board of Industrial Financial Reconstruction, BIFR, will help them to reconstruct through management auditor. Management auditor will visit those sick companies and he will analyze why these sick companies are sick, and he will give you the suggestions to revive these companies. Railways of India have used management audit in their finances to open discussion by public to improve the resource mobilization, reduce cost of operations, and conserve their scarce resources. So Railways of India have found management audit very, very useful. They have employed management auditors to manage their operations, reduce the cost of operations, reduce the cost at various places, and mobilize the resources. Railways have used it. It can help in analyzing social cost benefit analysis for public projects like dams, powerhouses, national highways, etc. So, guys, all these projects like dams, powerhouses, when you construct them, there is a social cost to it. You have to cut down many trees. You have to disturb the ecology of that particular area. Then the river flow, you will stop that river flow. If you make a dam over that river flow will stop. All these problems will arise if you don't do social cost benefit analysis of these things. Now these problems can be curtailed if management auditor comes into picture, and he would analyze before the project starts whether this particular project will have any social ramifications or not. He will analyze it. It is essential whenever a unit is planned to be taken over, or amalgamation or merger with another unit is proposed. So whenever amalgamation happens, whenever two companies are joining hands, in that scenario, the takeover plan or amalgamation plan is not successful unless and until management auditor comes and analyze the organizations. Scope of management audit. What all areas can management audit touch? Guys, I've already told you. Unlimited scope is there. Unrestricted scope is there. Management audit can be very, very vast. It can be very, very vast. Okay. Since management audit is very, very vast, therefore, the scope is unlimited. So management audit does not have any predefined specific area of conducting audit. It is much wider in scope. So it is the decision of the person who's hiring the management auditor and the management auditor. To what extent will this management audit be done? Now, the suitability of plans, activities, decision of the organization with the desired objectives and aims. Now, the management and board of directors, all of them are following the policies to pursue management goals. Okay, so now the scope will be defined according to the plans and activities and decisions which are directed towards the desired goals. All the scope will be directed to those activities. Current image of organization among customers, general public within its own particular industrial or commercial field. So what is the image of the organization amongst its members, amongst its customers? That image, whether it needs to change or not, this will also define the scope of management audit. So while determining the scope of management audit, we need to first consider the plans, objectives of an organization. Where does organization want to go? Secondly, what is the image which this particular organization carries in the market at large? Whatever image this particular organization carries, whether that requires a change, that is also a consideration while ascertaining whether management audit is required or not. Then efficient utilization of resources of the organization, that will be definitely a scope of management audit. Rate of return will definitely be a scope of management audit. Management audit will definitely check what is the return which shareholders are getting on their invested capital. Then management audit will check the relationship of the business with its own shareholders, investing public in general. Employee relationship will also be seen by the management auditor. What is the relationship between employer and employees? And I've already given you an example, guys, in my live experience. There was an observation of the employees of the company, although very, very small observation, but a grave observation which came in the management audit report. The aims and effectiveness of management at its various levels, such as top level, middle level, and operational level. So what is the effectiveness of management at various levels? This will be scope of management audit. Financial policies, definitely finances will be one of the areas of management audit for sure. Controls, production, sales, distribution, any other function of organization will all be part of management audit. Then what will be the qualities of management auditor? What should management auditor possess? Should he be very, very expert in Companies Act? Should he be super expert in Companies Act? Should he be super expert in Income Tax Act 1961? What should be the expertise of the management auditor? What should management auditor do? What should be his expertise? No, guys, management auditor should not be a Companies Act expert. Management auditor should not be an auditing expert. He should not be a taxation expert. No, 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 guys. See the qualities of management auditor. See the qualities of management auditor. He should be able to understand the business problems, first of all. He should be aware about what are the problems that a business face. Then he should have general understanding on motive, purpose, and objectives of the organization. What is the thing that organization is chasing? Is it chasing profitability or is it chasing long-term growth? That is the objective. Then he should be able to assess the program of the management. So management auditor is nothing but a programmer of the management. So he should be able to chase or align himself with the management's objective. Then he should have knowledge about principles of delegation of authority, because management is all about delegation. Management is all about delegation of authority. So he should be aware about the principles of delegation of authority. Then he should be able to understand the internal control devices, flow charts, flow of work, etc. He should be able to understand. Then, of course, guys, basic knowledge of company law, custom law, labor law should be there with the management auditor. And if that is not there, then he will not be able to analyze the financial aspect of a particular transaction. So these understandings are definitely required by the management auditor. Ability to prepare reports to various levels of management. So the management auditor should have the ability to prepare reports to the various levels of management. Report writing is one of the very important skills which a management auditor should have. In brief, he should be able to write many things. Okay, report writing skills are very much required by management auditors. Capacity to adjust personnel of different types with tact. So he should be very adjusting in nature, which means he should be able to extract the necessary information from various people of the organization. So he should have the capacity to adjust the personnel of different types of tax, etc. Now, what are the functions of management auditor? The functions of management auditor will include marketing, manufacturing, human resource, personnel, finance, research and development, anything and everything. Anything and everything should be the functions of management auditor. He should venture into anything and everything. Of course, for once he cannot analyze everything, so he should in phases analyze things. So in first phase he can analyze marketing, human resource and research and development department. In the second phase he can analyze manufacturing, personnel and finance department. This is how he can divide his work, but his work is wide in scope. Okay, then I'll quickly come to sources of information to management auditor. Now this is an important point, guys. From where will the management auditor obtain the necessary information? Where will he get to know whether a management is doing production function properly or not? What is the source of information which management auditor will see to have knowledge about the information? So the sources of information of management auditor are: number one, management survey. Management auditor can prepare a questionnaire, can prepare a survey whereby management will answer certain questions, and based on that questions, management auditor will further analyze the situation. So, for example, survey questions can contain questions to the production managers and the production team. Whether the input-output ratio is as per the industry norms. What is the input-output ratio of the industry, and what is the input-output ratio which is attained by the company? This quick comparison, if it is given by the production team, then management auditor will be able to know about the inefficiencies and wastages very easily. Simple, guys. If the management auditor takes care about the input output ratio, if it asks the input output ratio from the management, then definitely he will be able to understand whether production is doing fine or not. So this is the best way to identify possible control weakness. Through this technique, practical working information is obtained on functions and how it is actually functioned. So the management will be able to understand, the management auditor will be able to understand what are the difficulties in a particular area using management survey. Guys, you must have also seen, when you go to a particular facility like a hotel, a restaurant, they ask you to fill up a feedback form, whether the ambience of that particular restaurant was okay or not, whether the food was okay or not, whether the staff was courteous enough or not. All these things are in a checkbox manner, in a checklist. All these things are tick or not tick by you. That is management survey. That precisely is management survey. That is management survey. Okay, sir, got it. So this is a form which you will get in your management survey. Then management reports. So guys, there are various management reports which management auditor does not prepare. It is prepared by the management, or it is prepared by any other third party expert. For example, statutory audit report. Guys, even statutory audit report will give many hints to the management auditor with respect to the expenses and income of a particular organization. And then management auditor can tell that yes, your expenses are shooting up at a very high level. Why are they shooting at a very high level? Why is personnel expense at such a high level? Management can then question it. Management auditor can question it. So there are various management reports which, if given to the management auditor, he can take hints from those management reports, and the management auditor can actually start his working or start his analysis using the information which is given in management reports. The auditor's review of management and internal reports may be used to obtain information on progress, status, or accomplishment of work, and also on information of possible problem areas. Management auditor can obtain the management reports from the management. Management auditor can say, okay, give me last year's financial statements, an audited report. Give me last year's physical verification report. Give me last year's internal report. And then after reading that internal report or statutory report, management auditor can take a hint on how is the organization functioning. So yes, this is the second source of information of management auditor, which is management report. Then internal audit or inspection reports. Guys, these are also management reports. Internal audit report or inspection report will give an insight on how the things which are there in the organizations, like the inventory, like the fixed assets, whether they are actually inspected and they are there or not, or is there any leakage in the system. Physical inspection, of course, the management auditor can physically visit the plant. It can physically visit the floor to ascertain what are the wastages which are there. Sometimes seeing is believing. Okay. Seeing is believing means when you visit a particular office, then you are able to understand what are the wastages which are there in this particular office. So physical inspection is also another technique of gathering information. Discussion with officials and employees. This is a very famous and a very simple way to start your management audit. You discuss your problems with the management or the employees, discuss their problems with you, so that you can put those problems into perspective and you can analyze what are the reasons of these problems. So discussions with officials and employees is a very, very important tool to analyze the requirement of management report. Then testing procedure and practices. Test checking of practices and procedures in the problematic area on a sample basis can be one of the areas of gathering information about the management. So we test the procedures whether they are working fine or not, we test the practices whether they are working fine or not, and these tests will be then evaluated for management report. So these are the ways in which management order can gather the information. Okay, guys, just give me 1 minute. I will just put charger on my laptop and I'll be just back. Give me just 1 minute. Okay, so the next is technique of management audit. What are the techniques in which management audit can be done? What are the analysis, the point of analysis which can be done by the management auditor? That is what we are going to study now. So management auditor can have accounting and economic techniques. Guys, these techniques are used by you also for analyzing the financial statements of a particular company, like break-even analysis. These are very basic accounting and economic techniques. Okay, these are not related to people. These are not related to non-monetary things. These are only related to monetary things. Like, break-even analysis can be done. Budgetary control system can be analyzed. Cost management techniques you must have studied in your SCM, strategic cost management. You must have studied the cost management techniques. Discounted cash flow technique, net present value method technique, cost benefit analysis. So these are very basic accounting techniques which are used by management auditors to ascertain the financial health of the company. Please note that this only highlights the financial health of the company. Yes, sir. Then there are certain scientific techniques like computer models to take decisions on a material mix, product mix, make or buy decision. So guys, board of directors would have taken decision on material mix. X and Y both are to be mixed in which ratio to get the optimum output. This is known as the material mix. Now management would have taken the decision, but the decision is wrong. So management auditor should take this decision again using the computer models or using the scientific techniques to ascertain whether the material mix is appropriate or not, to ascertain whether the product mix is appropriate or not. So these are certain scientific techniques. The network analysis, then mathematical programming, linear programming, all these are scientific techniques whereby the management auditor can analyze whether the decisions which are taken by management with respect to production, with respect to selling are correct or not. Then there are statistical techniques. Statistical techniques means, guys, we had studied statistics in our, in our foundation level, and some bit of statistics we had studied in our intermediate level in form of OM, organization management. Okay, so those techniques can be used by the management to ascertain, by the management order to ascertain whether management is taking right decisions or not. Like Monte Carlo simulation, right? Exponential smoothing, interfirm comparison, activity sampling. So these are certain statistical tools which are which may be used by the management auditor to know whether the decisions which are taken by management are correct or not. Then personal technique, which means people related technique. What is the attitude and aptitude of people? You can do a survey within the people. What is attitude of people with respect to the management of the company? Whether people are very angry with the management of the company, or whether people are very happy with the management of the company. This is personal techniques, aptitude test, attitude test, ergonomics, man-machine relationship, training methods, profitability, productivity measurement. Then there are certain general techniques like statistical theory of management is an attempt to emphasize what should be the practical approach to a problem. Brainstorming. You can simply do a brainstorming. Brainstorming means you can sit with various people of management. You can sit with various people of management and discuss what are the issues which they face, discuss what is the resolution of those issues. So brainstorming is a very normal general technique. Transfer pricing, management by objectives, management by exception. What is management by objectives, management by exception? This is whether management only focuses on the key areas which are relevant for the organization, or whether management wastes its time on taking very minuscule small decisions. If management focuses on very small decisions, then management's time is getting wasted, guys. If their time is getting wasted, then that is not a good indication for the organization. Then management evidence. What are the evidences which can be gathered by the management auditor? So, in case of financial audit, the evidence are very same, very simple. Like you get vouchers, you get invoices. But what evidence will you get as a management auditor for the decision-making capacity of the management? What evidence will you get? It is difficult to collect evidence in case of management auditor. In case of management audit, it is difficult to gather evidence. So what evidences will we gather for proving that this management is bad or this management is good? What are the evidence which we collect? The discussions with the people will be the first evidence. Guys, there are no tangible evidences. Discussion with the people. Whatever people have said about management, that will be the first evidence which we have against the management of a particular company. And guys, this should be recorded well. This should be in recording with you. This should be recorded by you properly, because you should not be in air saying that management is bad because we have discussed with the people. Second evidence is survey and review of various reports of the organization. When we had asked for various reports like financial audit report, then we are able to understand that current ratio is very bad of a particular company. Then guys, survey and review of various reports is again a very important tool to analyze the management of the company. Physical inspection. We can actually physically, wherever we have visited physically, so if we have visited the godown physically, then we are aware that in the godown, there is no system of inventory in and out. In and out bins are not there. Proper recording is not being done in the warehouse. All these things we will get to know when we physically visit the warehouse. Okay. So physical inspection is again a management evidence. Then test examination of various transactions, whatever transactions have happened, the examination of those transactions, important files is an evidence. Monthly performance review statement, minutes, notes to above all personal observations. So minutes, notes, monthly performance statements, all these are management evidence which management will give you. So what is the constituents of management audit team? Who all should be in the management audit team? Should all the CMAs be in the management audit team, or should all the chart accountants be in the management audit team? Because guys, in cost audit, obviously there'll be all will be CMAs or CMA interns or CMA articles. All will be CMAs, right? In financial audit team, all will be chartered accountants or articles of chartered accountants. But in management audit, same profession people are not required. We need people from multi-disciplines. For example, we need chartered accountants, we need engineers, we need MBAs, we need financial consultants, financial experts. So the team of management audit cannot be restricted to only CMAs. It has to be wide in scope. So marketing, finance, manufacture, expert of all these areas should be there in our team. Production, material, every area expert should be there in our team. Now, what do you mean by management audit program? First of all, what do you mean by program? Guys, program means plan. Program means plan. So whenever you go for a picnic, you plan out things. Plan out means where should you go? Who all from a family member should go? What food do you need in the picnic? What to drink do you need in the picnic? What do you need? You do need a mat to sit in the picnic in the garden, All these things are required to be planned, and this plan is known as program. So management audit is also required to be planned. How many people are required? What will be their qualification? What will be their responsibility? What will be their area of accountability? All these things should be predetermined. This is known as the management audit program. Now, first of all, we need to know the organization's objectives and plan. What are the objectives which the management is pursuing? That we need to know. Then we need to study the policies and practices of the management. What is management actually practicing? What is management actually doing on ground to attain the objectives? Critical review of organizational structure. We need to know the structure. Study of systems and procedures. Evaluation of operations. Study of efficiency of use of physical resources. Maintain suitable monitoring system through management information system. Check the adherence to statutory obligation. Above all, review efficiency of manpower handling, which ultimately results in organization structure. So as all these things are required in the management audit program. First is the organization plan. Second is the policies which management is following in that organization plan. Third is the structure of the organization. What is the structure of the organization? Whether the structure is a suitable structure which is yielding profit or not. What are the systems and procedures in the organization? We need to evaluate the operations. Then what are the operations which are inefficient? What are the operations which are efficient? That we need to analyze. Then we need to exercise proper management control, maintain suitable monitoring system through management information system. Management information system should be properly monitored. Statutory obligations should be adhered to. Then efficiency of manpower handling should also be done. Then what are the characteristics of a good management audit report? Now, how will you say that management audit report is perfect in all respects? Okay, it should be relevant. First of all, the management audit report should be relevant. It should not contain unnecessary information. So, for example, now if there's an information that at a very junior level, the salary of one of the employees was not disbursed. It was disbursed 2 months late. Guys, this information is not relevant for the top management. What would top management do of this information? That some junior level staff's salary was disbursed 2 months delayed. What would management do of this information? So this information is not relevant to the management. So the first thing that is to be there in the cost audit report, management audit report, is that it should be relevant. It should pertain to the purpose, pertinence. It should pertain to the purpose for which it is serving. Second is it should be comprehensive, which means it should cover all the aspects of the organization. All the aspects of the organization or all the aspects of the chosen area should be there in the management audit report. It should be comprehensive. So, for example, if you have chosen production function as your subject matter of management audit, then all the departments of production function, be it a quality check, be it the people who are infusing raw material to the machine line, be it the people who are packaging the final product, be it the people who are transferring the final product to the trolleys and trucks. The each and every entire aspect of production function should be analyzed. So the audit report should be comprehensive. Brevity, the audit report should be brief. Guys, I'll tell you very important thing. Okay, as you move up the ladder means as you move to the different level of management hierarchy, your attention span reduces. So a CEO's attention span is very less, or a CFO's attention span is very less. He cannot listen to your lengthy story. You have to be to the point. You have to tell the exact point. You have to be to the point. They cannot go on and on with your stories. They cannot go on and on. So your audit report should be brief. Your audit report should be concise. That is the point. Your audit report should be very brief. The audit report should be issued in a timely manner, which means the audit report is to be issued within a few weeks of the conduct of audit. It should not so happen that audit report is being issued 2 years down the line, when all the problems which existed in the management have been resolved automatically. So guys, in case of statutory audit, cost audit, and any other audit, there is a fixed timeline which is given. There is no fixed timeline in management audit, but it should be released in a reasonable time. It should be released in a timely manner. Motivating. So management audit report should not be demotivating. It should be motivating. So you should not highlight all the negative points in the management. You should not say that the management of the company is very bad. It is not taking good decisions. It should be changed completely. No, it should not be written in a negative language. It should be written in a positive language. Example is given to you. The production planning was done inadequately. It may be written that the production planning may be improved by taking the following steps. So Negative language should not be used. Positive language should be used in your audit report. Formatting and presentation is very, very important, guys. Font size, spacing, font type, this should be adequate. Okay. Because this enhances the quality of the audit report. Although the content of the audit report is most important, but its presentation is also equally important. So the font size, the font type, all these things are relevant in case of a management report. So all these things are taken into consideration. Now, contents of management audit report. What all things should be there in management audit report? So, four important things which are required in management audit report is facts, person who are responsible for the areas which are being audited, person who is responsible for these facts. Then, deviations, if any, in the actuals, performance standards, and effect of result of the financial and physical status of the organization. So these are four important things that a management audit report should contain. It should contain the facts. It should contain the people who are responsible. It should contain the deviations, if any, from the performance. So report must allow the management to, what is the objective which management wants to pursue? It wants to study the comparison. What was the cost earlier year? What is the cost current year? Comparison should be there in the management audit report. Review of organization to appraise the effectiveness of executives. What are the executives doing? What are the directors doing? What are the efficiency of the executives? Departmental weakness should be there. Then prudent management practices. How can we improve the management of the organization? That should also form part of management audit report. Help in change of management mindset. Indicate suggestions that come from people themselves and get solutions to the problems. So all the problems should not be written. The solutions to the problem should also be written in the management audit report. So these are the essential elements of the management audit report. Now, guys, in certain cases, in certain sectors, there are certain special reports which are expected from the management auditor. There are certain specific things which are to be introduced in the management audit report in certain sector. For example, if you are doing special audit of a bank, if you are doing management audit of a bank, then guys, they will definitely expect that the debt servicing bit of bank should be clearly disclosed. What do you mean by debt servicing? Debt servicing means how well is bank servicing its debts. Whatever debts bank has, how well is it servicing its debt? So for example, if bank has given loan to someone or has taken loan from someone else, then is the interest component which is being paid or which is being received is adequately done by the bank. Similarly, creditors want to know whether the statements which are made in the report are accurate and reliable. The statement of financials are accurate or reliable. Creditors want to know the creditworthiness of the company. So creditors also want to know all the statements by the auditor should be clear and positive. Explanatory notes should also be there. So guys, bankers and creditors want to additionally know the security due of debt servicing. What is the debt servicing capacity of a particular organization? So banks want to know if a loan has been given to the company, then banks want to know that whether that loan can be repaid by the company or not. So if you're doing management audit of on behalf of a bank, if you're doing management audit on behalf of a bank for a company, then you should necessarily include whether the company will be able to repay the loan or not. This aspect should necessarily be included in the management audit report. Naturally, guys, if bank has hired you as the management auditor, it will definitely want to know whether the loan which it has given to the company will be repaid or not. Then what would shareholders want to know from the management auditors? What would shareholders want to know from the management auditors? That is the next question. Guys, shareholders want to know about the organization's business, first of all. Okay. Full facts about the organization business, whether organization business is being carried on properly or not. They want to know right and correct message. They want to know right facts and correct facts. Okay. They want to know in the prospectus whether right information is given or not. In the prospectus, because shareholders are bothered about prospectus while taking the shares. So they want to know whether prospectus is showing the right information or not. Then shareholders also want to know between the line implications of auditor's report. So ultimately, the auditors, the financial auditors sometimes try to mince with words in the financial audit report. So the shareholders want to know the unknown facts. What is the between the line which is written in the auditor's report? So whenever you are hired by the shareholders as a management auditor, you should additionally keep in mind these important points. Okay, what would employees want to know? What would employees want to know from the management auditors? Guys, employees would want to know obviously the business employees want to know what is the business being done, is it done efficiently or not. Then the unions of the employees want to know if there is any misconception with respect to the management of the company, that management of the company does not give bonuses even when they have profits. Sometimes union feels that. So the management auditor would ensure that it sees the financials and sees that bonuses, where if they are not being given, then there's a reason why they are not being given. Okay, so management auditor will ensure that the report must gain confidence of the employee and earn respect of the statement. Report should be consider the needs of the employee. So whatever employee needs from the management audit report, that should be included in the management auditor report. Auditor's view will be expected to be totally unbiased. Small businesses. If some small businesses have hired you as the management auditor of some big business, okay. So if sometimes all the small vendors of Reliance Industries Limited want to know whether Reliance Industries Limited is treating the management properly or not. So small businesses want to know whether the big businesses treating everything right or not. So they can hire management auditor with respect to Reliance Industries Limited. Report to be designed designed in a very simple way. If it is specifically directly to any person or small group of person, suggestions in the report must be based on proper appraisal of the problem. Okay, sir. And yes, we are moving towards the last topic of our chapter, which is management audit and operational audit. Now, guys, there are two words: management audit and operational audit. There are two words: management audit and operational audit. Now, operational audit means we want to ensure that all the operations are being done in appropriate manner, efficiently, without any inefficiency. The operations are being carried out. So operational audit is focused towards operations like manufacture, like production, like distribution, like finance. Everything should be done in a proper manner. That is the objective of operational audit. Now, what is the objective of management audit? Management audit focuses on operations as well as all other parts of the organization, like finance, like customer care, like creditors care, like shareholders care. Everything is included in management audit. So management audit, although has got a very important constituent as operational audit, operational audit is definitely an important aspect of management audit, but management audit is wider in scope. Management audit is wider in scope. Operational audit is a part of management audit, but yes, operational audit is the major part of management audit. So if I were to tell you some number, 70% of management audit is operational audit. 60 to 70% of management audit is operational audit. So management audit and operational audit are two sides of the same coin. However, management audit is a little wider term because it includes financial audit, cost audit, company secretary audit, along with the operational audit. So operational audit is just a part of management audit, but operational audit is a very big part of management audit. So management audit is wider in scope as compared to operational audit. Management auditor is concerned with management quality of management, whereas operational audit is concerned with quality of operations of an organization. Okay, so I'll show you a coin. Okay, this will tell you what is the relationship between. Acha, just underline one very important line, guys. Very important line. It is not that he just verifies the operations of control, procedure, fulfillment of plans in conformity with the prescribed policies. So the management auditor is not only analyzing the operations of a company, he's doing much wider role. So we can say that the two audits are complementary and supplementary to each other. This is the statement which I'm going to highlight. So management audit and operational audit are two faces of the same coin. This is a coin, right? 10 rupee coin is there. Heads, tails. Management audit and operational audit are two faces of the same coin. They are complementary and supplementary to each other. Management audit is incomplete without operational audit. And operational audit will be little less if management audit is not there. Operational audit is not sufficient enough. Management audit will be incomplete without operational audit. So they both are, congruent to each other. They both are aligned with each other. All right. And we move on to the last aspect of our topic, guys. Management audit, internal audit, and financial audit. The difference between these three kind of audits. Okay. Now, management audit appraises the management. Internal audit assist the management in identifying problems with respect to operations. Internal audit is typically focused towards operations. Okay, so it helps the management in identifying problems with respect to operations. Management audit identify problems in the management. Internal audit identifies the management, identifies the problem with the management. Let me repeat. Management audit identifies the problem in the management. Internal audit identifies the problems with the management. So that is the difference. Financial audit, cost audit, these are specific audit which are done in specific areas. Okay, like financial audit only focuses on financial statements, cost audit only focuses on cost statements, secretarial audit only focuses on secretarial statements. So these are specific areas audit. So management auditor is a friend, philosopher, and a guide. Internal audit is a policeman or a judge who will judge your performance. He's a friend, philosopher, and a guide, management auditor. And a normal audit is a watchdog or a judge. Okay, outside team or management conducts management audit. Similarly, internal or external person does internal audit. So both of these are same. Both of these are same. Specifically designated person for these statutory audits because these are held by law. Force, voluntary. This is statutory in some cases, voluntary in some cases. This is mostly statutory, guys. This is mostly statutory. Area. Complete management is the area. Mainly these are procedural aspects which are area of internal audit, and statutory audit has specific objectives. Similarly, guys, effectiveness and quality of management is the evaluation which is being done. Quality of procedures is the main area of internal audit. In case of statutory audit, specific information is required, like financials are prepared according to IFRS or not. That is a specific information which is required. Period covered, past, present, future. Past and present is covered in internal audit. Mainly past is covered in statutory audit. Procedure, flexible, structured procedure, highly structured procedure. Flexible means you can adopt different procedure for different areas. There's no set pattern. There is a set pattern in internal audit. It has been guided by the Institute of Chartered Accountants of India. There's a set pattern according to which internal audit is done. And of course, statutory audit is highly structured. Companies Act 2013 gives a highly structured way of how to conduct statutory audit, like cost audit, like company secretary audit, etc., etc. Reporting is done to higher people, high level people. Operational people are the people who are given the reporting, and reporting is done to designated people. Like in statutory audit, shareholders are the reportees. In cost audit, board of directors are the reportees. Time span is futuristic. We focus on future because we need to improve the organization management audit. Current and immediate, internal audit focuses on current period, and current and immediate past is the focus of statutory audit. Period, regular, we do regular. Management audit can be done regularly. Internal audit can be done regularly. The statutory audit should be done annually. And yes, we come to end of first section, management audit, of our syllabus, guys. So we'll be starting chapter number 2. Before we start chapter number 2, please tell me, how's the josh with all of you? Are you all tired? Are you all tired, or should we continue with our marathon? Are we tired? Are we tired? Please give your answers in the chat box. Are we tired? Or how's the josh? Oh, almost 80 people are live currently. And yes, 80 people with one objective, one goal in our mind. The goal is very, very clear. The goal is to qualify CMA in June 2022 attempt. To qualify CMA in June 2022 attempt. That is the goal which all of us are pursuing as of now. Yes, sir. That is the goal which are pursuing. And sir, we are not tired at all. Are we tired? No, not tired. Pramod is saying not tired. Rishita is saying no, not tired. Jayashree is saying no, fantastic lecture. Ashwin is saying no, continue, sir. Very high, sir. Not tired. All right. That's the spirit, guys. So we are not taking any lengthy break. We'll just take a break for 2-3 minutes, guys. A water break. Okay. A water break for 2-3 minutes. We'll come back after the water break. 2-3 minutes, maximum 2-3 minutes, not more than that. We'll take a water break and we'll be starting our chapter number 2, which is management audit and different functions. So yes, a break of 2-3 minutes. That's it. All right. So, yes, we are back with a bang for continuing the marathon lectures. And Saurabh Mukherjee is saying, full Josh, sir. Yes, I'm also having full Josh. Yes, we all are in full Josh and we all are wanting to score well in cost and management audit. And guys, I have not told you, but cost and management audit is the dark horse. Cost and management audit will help you score very good marks because cost and management audit is very, very scoring subject. Both BVM, SPM and cost and management audit are very, very scoring subjects. So both of these subjects should be done very well by you because these are the dark horses. And trust me, Group 4 will be qualified only because of these two subjects, because these two subjects will make your aggregate. These two subjects will be helpful in making the aggregate because these are very, very easy subject. Is this enough to score 60 plus? This is enough to score 80 plus, not 60 plus, 80 plus. All right. So let's continue, guys. Management audit and different functions. Okay. Now we need to understand certain elements of management audit, certain terminologies which are used in management audit. We need to analyze those terminologies, and only then we'll be able to understand the entire concept of management audit. Number one, corporate objectives. So, management works towards corporate objectives. Whatever are the objectives of the management would work towards them. So it's really important to understand what are the corporate objectives which the company is going to pursue. So I'll give you an example. McDonald's corporate objective is to achieve 100% total customer satisfaction every day in every restaurant for every customer. So the objective which McDonald's is pursuing is customer satisfaction. Customer satisfaction is the objective which McDonald's pursue. Guys, some companies pursue the objective of piercing through market. Market standing should be more. They should have more market standing. Some of the companies follow this corporate objective. Some of the companies follow the objective of profit maximization. Come what may, we need to increase the profit maximization. Some companies pursue the objective of increasing sales, increasing turnover. So there are different objectives which are pursued by different companies. So the first thing that management auditors needs to understand is what are the objectives of the organization that influences the direction of the corporate strategy. Because strategy or the plan will follow the objective. Whatever will be the objective, accordingly will make the strategy. So if your objective is to qualify CMA final examination first attempt, you have to work very, very hard. You have to study. You have to study for 10 hours or 8 hours or 12 hours a day. That is your strategy. So the objective will be followed by strategy. You should have a clear objective, then that will be chased by strategy. That is corporate objective and strategy. Now, what is a corporate image? A very, very important word, guys. Corporate image, and an important concept from an exam standpoint also. Okay, image. Okay, image. So when you see this sign, what image comes to your mind? When you see this sign, McDonald's, what image comes to your mind? To my mind, the image of a burger or a pizza McPuff. Okay, or that toy which we used to get in that Happy Meal, that toy. All these things come to my mind instantly when I see this image, McDonald's. So what image do you want your people to carry about you? That is known as a corporate image. So for example, Tatas have a corporate image of being very philanthropic. They do a lot of charity. They do a lot of public service. They do a lot of social things. As compared to that, Reliance Industries Limited is more targeted towards profit maximization. They are more known for their business skills. They are more known for their profits. That's the difference between these two corporate world. Okay, so what image do you want people to see you as? That is known as a corporate image. So as a teacher, what image do I want to be seen as? Do I want to be seen as a person who just for money will sell the classes and will not solve the queries of the students, will not take phone calls of the students? Will I want to be seen myself like that? Or should I be seen myself as a person who believes in a fact that selling classes is a first step, and after that our role starts. We need to take calls of the students on a regular basis. We need to take test series. We need to take live sessions for the benefit of the students. What image do I want for myself in the market? Clear as that. And that reminds me, guys, Thank you so much for all the CMA final students. Thank you so much. For past 4 months, we were having a test series of Cost Audit and BVM SPM for past 3 months actually. And that test series has covered all the chapters of Cost Audit and BVM SPM. The details were given on my communities tab. And many of you have participated in that test series, and that was a ultimate successful test series. Yes, that test series will be pivotal in your results. You will see effect in your results if you have given that test series. Thank you so much for participating in the test series. So what is an image? Image is idea or procure formed in the mind of a person about an individual or an institution. So what do other people think about you? What do other people think about you? That is your image. That is known as image. What do other people think about you? As a company, what do people think about you? That is your corporate image. Corporations, like individuals, consciously build up images in minds of people with whom they come into contact. This is known as corporate image. So yes, you need to actually develop your corporate image to a very, very positive area. Sir, how do we know what is our corporate image? Just call your customers, you will know what is your corporate image. Just call your debtors. So if an individual is asking me, sir, how do I know my image? I will call up that individual's friends. I will call up that individual's teachers. I will call up that individual's parents to know what is that person's image. In case of a company, you can call up your customers to know your image. In case of a company, you can call up your shareholders to know your image. In case of a company, you can call your suppliers to know your image. You can call your bank to know your image. You can call Government of India to know your image. They will all tell about your image. So customers will tell you about product quality, prompt after sales services, regularity in maintaining supplies. Shareholders will tell your financial performance and prospect of growth. They will tell your image about both these things. Suppliers will tell you about company's liquidity, ability to honor commitments of the suppliers. They will tell you how fast are you in repaying their debts. Banks will tell you how fast are you in servicing debt, how fast are you in paying the EMIs of the bank. Government will tell you how fast are you in paying tax. Are you an honest taxpayer or not? Employees will tell you whether a career growth has been given by you to them or not. So, so image is measured by all these people. A corporate image is measured by all these people. All these people will tell you what is your image in market. That is known as a corporate image. A very, very important point. Evaluation of corporate image. How will you evaluate your corporate image? Which means how will you how will you know whether your corporate image is up to the mark or not? First of all, prepare a list of desirable attributes. See what you want to achieve as per your image. So as a teacher, I want to be known as a teacher who is very approachable to the students. That is one desirable trait. I want to be approachable to the student. I want to directly take calls and speak to the students. I want to be very approachable to the students. So first of all, list down all the desirable attributes which you want in your image. Step number 2, group them functionally and specify the qualifications. I will group them together on the basis of the functions. For example, teaching. I want my students to know me for my charts, for my easy language explanations, for my live sessions, for my test. This is one category. I want my students to know me for my communication skills, for my approachability, for my resolution of their problems in a quick manner. This is another function. So all the attributes should be functioned in a similar way in a different segment. Assign weights to each attribute based on their relative importance. So whatever is the importance in your mind, assign weights. So the most important thing for me is to teach well. Okay, that is the most important thing. So I will assign 2 weight to that particular attribute. Involve experts in respective fields in rating qualification attributes based on facts, judgments, and interpretations. So involve experts. So I should hire some experts, some experienced teachers to show them my videos and check with them whether am I teaching well or not. So I should contact experts. Summarize the ratings under the selected groups, present the composite evaluation to the management of the company. Ultimately, you will summarize all your understanding about the corporate image of a particular company, attributes and its testing, and give it to the company and tell the company that this is your corporate image valuation. So evaluation is to be done on a very, very step-wise basis, on a methodical basis. First, we will define the attribute. Then we will club the attribute on the basis of their functions. Then we will give ratings to the attribute. We will rate the attribute, which is more important, which is less important. Then we will judge the attributes. Okay, we will judge what is going good, what is going bad. We will contact your customer of the company and see whether he is satisfied with your after sales services or not. We will do that, and then we'll summarize it to the management of the company. Next is, what do you mean by corporate image? What is a corporate image? Oh, next is corporate culture. So guys, corporate culture means the culture which is there in the organization. So what is the experience and behavior of the people in the organization? That is known as corporate culture. So what are the values, beliefs, and behaviors on the basis of which people interpret experiences and behave? That is known as a corporate culture. What is the culture which you have in your organization? Is the culture of honesty, of integrity, of servicing the customer to its best ability, or the culture is of just chasing the profits? That's it. We don't want anything else. We just want profits. What is the culture? So culture is very, very important in any organization. What is the behavior of people in a particular organization? So guys, I'll give you a simple example. If you go to a local grocery shop, then in the local grocery shop, sometimes people are rude. Sometimes people will not give you importance, will not give you attention. You will ask for a product, they will say that this is for so much rupees. You pay the money and then take the product. They will not allow you to see the product and analyze it. As compared to this, if you go to a supermarket, then you will be able to see the product, take it in your hands, see its ingredients, price, everything else, and keep it back in the shelf. That is the difference in their culture. That's the difference in their culture. Culture of a supermarket is very different from culture of a local grocery shop or a local shop where all these things are there. So corporate culture, how are you defining culture, experience, behavior, values, beliefs of your organization, of your corporate, of your company? That is known as a corporate culture. Now, corporate culture comprises of following things: commitment to honesty, okay, planned performance and growth. You will plan your performance, you will plan your growth. It has to be informative, informing, and informed organization. The corporate culture should be of gathering information. Be informative. Gather a lot of information about your competitors, about what is the best culture which is being there in the market. Be very, very informed. Consideration for partnership with the organization, for others in the partnership with the organization. So any other person who's linked with the organization, how do you treat them? How do you treat your customer? How do you treat your employees? How do you treat your vendors? That is an important part of your culture. Participative management. Management should be participative, which means management should take views of the employees also in making decisions. Management should not just take decisions and give it to the employees. It should be participative management. Good employee relationship should be there. Good decisions and timely action should be taken. Quality should be of utmost importance. Cleanliness should be of utmost importance. Mutual trust should be there. Future looking should be there in the management. Helpful nature, interinstitutional towards neighborhoods should be happy with you. Cleanliness is something which is very much required in a corporate culture. So corporate culture means is an accumulation of various factors, various values, beliefs, and assumptions that an employee has about the organization. This is known as corporate culture. So our culture should be very, very conducive to work. It should be very, very conducive to growth. It should be conducive to profitability. That is known as corporate culture. Now, what do you mean by corporate services? Guys, corporate services means support services which are provided by a company. Support infrastructure which is provided by a company. So after the sales is done, is there any after sales services? If the customer wants to know about the details of the product or how to use it, is there after sales services? So for shareholders, if there's an ombudsman scheme or not? For the creditor, is there any contact person whom the creditor can contact about recoverability of their debt? For banks and financial institution, is there a person who can resolve the queries of the banks and financial institutions about their loans which they have given to the company? All these things are defined by corporate services. So corporate services are the support infrastructure of the company. Whatever is supporting the main activities of the business, that is known as a support infrastructure. So corporate services are the support infrastructure of the company. The activities in such areas include enterprise-wide support services which are required based on specialized knowledge, best practices, technology, There are various services which are related to technology, like IT services are required. We should have an IT department who, if if laptops are not working fine, then they should quickly come and rectify the laptops. Then serve internal customers and business partners. So internal customers are also required to be served. Internal customers means employees of the organization should have no problems in working in the organization. They should have proper infrastructure to work, right? Coordinate diverse organization units and help them focus on organizational goals. So the role of corporate services is that it should coordinate with the diverse organization units. It should give services to all the organization units. What are organization units? Organization units means HR department, finance department, production department, distribution department. All these should be knit together. For example, water services. Water services are required by production department. They're required by manufacturing department. They're required by finance department, quality control department, shareholders. Everyone requires water. So water services should be provided to all the organization units, irrespective of what functions are they considering. Exploit resources and develop core competencies that enable the organization to keep its edge over the industry competitors. So core competencies should be developed by using these corporate services. Combining operations with another competitor in same industry to increase competitive strength. We can also combine operations, right, with another competitor in the same industry to increase competitive strengths. So certain support services can be combined. So for example, I am selling laptops, and the shop which is next to me is also selling laptops. We can together have a call center to address all the queries which comes from the customers after the sales are made. We can have it combined, right? After sales services can be combined by both of us. So these kind of combinations can happen in corporate services. Then what are corporate services audit? So guys, again, management auditor will see whether your after sales services are absolutely perfect or not. It will see whether the employees are satisfied by your salary disbursement, employee welfare or not. All these things will be seen by the management auditor. So corporate services audit will cover the areas like, for consumers, quality of the good is right quantity and right price, right place is given to the customers. For employee, payment is given on time, training is given on time, safety is there, welfare is there. For shareholders, safety of investment is there, satisfactory returns are there, appreciation of investment is there, and yes, ombudsman scheme is also there for the shareholders. For the community, social cost benefit analysis should be made. For fellow businessmen, you should have ethics and fair trade dealings with fellow businessmen. Even if you have competitors, you cannot say bad words about your competitors, right? So fellow businessmen should also be treated well. Okay, corporate services. Government should be satisfied with you. You should be compliant with law. Fair trade practices should be there, and timely payment of taxes should be there. So this is the concept of corporate services. So corporate services audit is the appraisal that should consider the level of contribution a business entity is making to the society and its environment towards raising the quality of life through better product quality services rather than profit maximization. So the aim of corporate services audit is not to make sure that profits are being earned fine or not. The aim of corporate services audit is to make sure that the betterment which the company is providing to the society is there or not. Is there something benefit? Is there something beneficial which the company is providing to the society? That's the aim of corporate services audit. Okay. Okay, next word is very, very important. Corporate development. Okay. Now, before telling details about this particular concept, I will like to tell you the difference between development and growth. There are two words which are there, development and growth. What do you mean by growth? What do you mean by development? Okay. There's a fine line of distinction between growth and development. What is that difference? I'll let you know. Okay. What do you mean by growth? Growth means you are achieving your targets in a very, very streamlined manner. Okay. So I'll tell you a very simple example. So if you are a CMA student and if you have qualified your foundation, inter and final on time, that is growth. But what is development? Development means along with doing CMA, you are improving your communication skills, you are improving your Excel skills, you are improving your Word skills, you are improving your SAP knowledge, you are improving your tally knowledge, because you know that apart from clearing the examinations, you would need knowledge of all these spheres in future. You know about that. That is development. That is development. So if a business organization only focuses about profit and growth in terms of profit maximization, then it is targeting growth as its objective. However, if the management or an organization wants to target development, overall development, then it will always focus on things which are not related to profits as well, like customer satisfaction, like market share should be increased. Even if prices are low, market share should be increased. More people should be able to buy my product. So all these things are targeted by the people, by the companies. This is known as corporate development. So corporate development is the process of taking strategic decisions towards to grow and restructure one's business. Strategic decisions are to be taken to grow the business and restructure the business. For example, mergers and acquisition can be an important way of developing. You are into manufacturing of laptops. You venture into manufacturing of mobile phones as well. That is development. You're not only focusing on one thing, you are growing your market size. So growth of market size, this initially will lead to reduction in profit, but in a long run, it will lead to increase in profit also. So this is development. Now, the management auditor will focus on corporate development audit as well, whether the management is focusing on developing its a business, or is it stagnant. Management should not be stagnant. Whatever it is doing, it is definitely doing, but the management should not be stagnant. It should focus on developing the business also. Otherwise, management will become obsolete. The management will become stagnant if it does not develop in terms of business. So it is an independent and objective study of organization's capabilities. So what is organization capable of doing? That is the important aspect of corporate development audit. It gives a comprehensive picture of status of corporate development effectiveness and highlights the developmental needs. So wherever corporate needs to develop, wherever corporate needs to grow, their corporate development audit is very, very important. And yes, management auditor is in a very favorable situation to do this corporate development audit. Management auditor can actually recommend that you are already into cloth business. Why don't you come into cotton business also? Management auditor can recommend development scope, development area. So what are the objectives which are pursued by corporate development audit? The various factors and forces constituting a corporate enterprise are right, kind, and quality. So first of all, management auditor will ensure that the factors and forces constituting corporate enterprise are right quality and right kind. All the infrastructure which is there in the organization is suitable for developing further. This is the first assurance. Second, communication is the key. Management is able to communicate well with the employees, because if you open a new wing, then the existing employees will be a little jittery. They will be a little awkward, because they'll be required to do more work. This can be a situation. Pattern of departmentalization is very, very important when you are considering corporate development audit. What are the departments that you have made? Okay. Personal problems are handled appropriately. That is an important aspect of development. Development cannot happen if personal problems persist. If your union is not supporting you, if your manpower is not supporting you, how will you develop? How will you enter into different spheres in your organization? Responsibility for planning, coordination, motivation at functional levels are discharged in proper spirit. So the planning, coordination, motivation, all these functions should be discharged properly if you want to develop. Then there are certain checklists in the areas of corporate development audit. If you want to develop your corporate development areas, then you have a checklist. You can check on certain things. You check on planning. Okay, so first of all, you do SWOT analysis. That will make you privy to the fact that what are your strengths, what are your weaknesses, okay, what are your opportunities in your business. Only then will you be able to develop more. Okay, once you know about your SWOT, then only will you be able to develop. So first is SWOT analysis. Then you need to know your corporate strengths and weaknesses in relation to price, quality. So guys, this SWOT analysis should be done in respect of price. This should be done in respect of quality. This should be done in respect of market share. So SWOT analysis should be a detailed analysis. Then what are the opportunities and threats? You need to know what are the opportunities and threats. Again, opportunities and threats with respect to rivalry, threats of new entrants in market, opportunities which are there, you need to analyze. So SWOT analysis is spread into these 3 points. How are the threats overcome, opportunities avoided in past? What is your corporate image? Whether corporate image will improve in future or not, whether you want to improve in future or not. So guys, these are certain checklists. Okay, I'm not going through each and every point because you need not remember each and every point. If you just remember 4 points out of each of the category, it will be more than enough. Okay, but the ultimate aim is that we need to develop as we need to develop further growth. Okay, we need to venture into more things. We need to expand our market share. What steps do we need to take to expand our market share? That is the ultimate objective of corporate development audit. So this is the checklist. You can just go through them. It's very, very simple. It's very, very straightforward. All right. Now we come on to a very, very important aspect of management audit and corporate development audit as well. It is personnel growth. It is personnel growth. Guys, people are the core of any organization. Unless and until you focus on people, your organization will not grow. If you want your organization to grow, you have to focus on your people. And people development is the core of any management audit. Fulfilling the needs of the people, the present and needs of the people is to be fulfilled. Only then the organization will grow. So if personal management is concerned with managing people at work, the personal management is a very, very important aspect of your management audit. Personnel should be happy from you. They should be absolutely happy and they should be absolutely satisfied. So what are the components of personnel management? First of all, organization should review and analysis what should be the appropriate work structure, what should be the roles and responsibilities of any organization, intra and inter department relationship. All these things should be reviewed and analyzed by the management first of all, or the management order first of all, to know where are the lacunas. Unless and until we know what is the existing organization, we will not be able to know the lacunas, the drawbacks. Okay. Then manpower planning, recruitment, selection. Then the second aspect of personal management is then we will plan how to recruit new employees or whether to move existing employees to new roles. Okay. Once the roles are defined, then we will plan for manpower acquisition and putting them at the right places. Okay. Right man at the right places. Third is manpower training and development. We will develop our manpower. We'll train our manpower. That is the third aspect. Then we will appraise their performance. We will, assess their performance. We'll tell them where were they right, where were they wrong. Performance appraisal is the next part. Then remuneration should be fixed as per the job evaluation, as per the market standards. What will be the incentive payments? All these things should be determined. Employee remuneration is definitely the most important aspect of any personnel management. Employee services, are we providing employee services or not? For example, whether employee is getting provident fund or ESI benefit if it's working in your organization, whether employee is giving that or not. So social security plans, community development programs, his health, his welfare should be taken care of. Administration and records, so administration of the employees and documentation for all the employees, everything should be in place, everything should be fine, the documentation should be strong. Then industrial relations, what are the relationship that an employee has with the industry, people and institutional differences. It includes establishing appropriate procedure for resolution of personnel and institutional differences by means of appropriate measures and machinery. For example, standing orders, grievance procedures, conciliation, collective bargain, joint consultation. So wherever employee is having a dispute with the company, like unions and company have certain disputes, then guys, how to resolve those disputes? How to resolve those disputes? That is an important aspect. There are many mechanisms to resolve that dispute. There are reconciliation mediation centers. There are courts which are dealing with employee grievances. So all this should be in place. Auditing and research and manpower management. Then we will audit and research whether our manpower management is appropriate or not. Next aspect of management audit, again an important aspect, consumer services audit. Guys, consumer doesn't only want product from you. It also wants quality, after sale services, right price from you. And as you were aware, customer is the king. Customer is the king. That is a very old saying. So customer services audit is very, very important. We should understand whether company is providing adequate services to the consumer or not. So as I still remember, I bought this Lenovo laptop, and this Lenovo laptop came with a 2-year warranty. So within 2 years, guys, if any small or any big damage occurred in this Lenovo laptop, it was rectified by the company. The person would come to my home and give me on-shore services. on-site services. These are known as on-site services. The company gave me on-site services, and I was very, very happy with the after-sale services of Lenovo laptop. But yes, I had to purchase the additional warranty period card. So these are certain experiences which remain with us forever. Again, whenever I'll be buying a new laptop, I'll consider Lenovo as a preferred choice. This is the consumer services audit. So we need to be very, very sensitive towards the benefits, towards the needs of the customer. And what are the needs of the customer? Right quality, right time, right quantity, right place, right price. These are the needs of the customers. Please highlight the needs of the customers. Right quality, right time, right quantity, right place, right price. These are the needs of the customers. The consumer services audit critically examines and appraises management on these aspects of services. So the consumer services audit will analyze whether you are giving these benefits to the consumer or not. This is known as consumer services audit, and customer satisfaction is the key. Customer satisfaction is the key in any business. Okay. Now let us read what are the essential ingredients, important aspects of consumer services audit. Okay. Need of the customers are to be taken care of. Product price reasonable and it should be consistent in quality. Product price should be reasonable and the quality should be consistent. Okay. If there is any added value, then it will be beneficial. What is added values, guys? Sometimes, we get free gifts along with the products. We buy a product and we get free gifts. Okay. That is known as added value. So added value can be given to the customers. So guys, as if you have purchased my, my books or my video lectures ever, you would always observe that I always send a motivational quote to all of you in form of magnets. How many of you have those magnets in your home? Please write yes in the chat box. Do you have any magnet which I've sent to you along with your course material? Do you have those magnets of motivational quote along with your course material? Do you have it placed somewhere around you in your room? Please write a yes or a no in the comment section. Do you have those magnets? Sunny Kaushik says, I do have. Who else have it? Naga says yes. Shubha says yes. Saurabh says yes. Yes. Who else have it? Sushmita says yes. Sunny says, I have it on my Almira. Absolutely, guys. So, guys, these are value added things that can be combined with your product. Motivation or vigor is something which is very much required by every student. So that was a thoughtful thing which I deliberately keep along with my books, along with my course, which will motivate you towards your goals. And trust me, according to law of attraction, if you have something written in front of you, the probability of you getting it is much, much, much more than any other person. So, if I have some quote written in front of me like dreams, don't let your dreams be dreams, then whatever dream I have, I will be able to achieve it after a point in time. So yes, these are known as value added services. Yes, Suryavanshi, I have my classes both in Hindi and in English. I have my classes both in Hindi and English. Guys, in YouTube channel, I deliberately speak only English. Why? Because I have a lot of South Indian subscribers. On my YouTube channel, I only speak in English because I have a lot of South Indian subscribers. But my classes are available both in Hindi and English language. All right, so let's continue. Yes. After sale services are required by the customers. That is the important thing. Then you should consistently improve the product quality. Product value should be improved consistently. Guys, I still remember, earlier Kisan ketchup used to come in a glass bottle. Then came the plastic bottle. And now we see Kisan ketchup in a pichku small sachets, pichku sachet, where we squeeze it, it comes back to its original shape and it is not wasted. So these are the improvements in product and product quality that is desired over a period of time. Complaints are handled properly. Responses should be quick to the consumers. Then safety norms are followed like ISA, FSSA, BSS, etc. Then all the warranties are explicitly stated and the provision of invocation of warranties are stated unambiguously. So these are certain benefits which are, these are certain aspects which are covered under consumers audit. So consumers audit is a very, very important aspect, guys. Consumer services audit, and these aspects are covered in consumer services audit. Now, what do you mean by corporate social responsibility? CSR. Guys, we all know we are there in an environment. right? We are there in an environment and we have air, water around us. It is our responsibility to conserve it. It is our responsibility to preserve it. That preservation of our society, our environment is an essential element of corporate social responsibility. And yes, as a management auditor, I would definitely want to see whether you have fulfilled your CSR properly or not. I will definitely want to see that. As a management auditor, I would want to see whether you are fulfilling the corporate social responsibility or not. I want to see that. As a management auditor, I will check it. Okay, sir. So whatever are the environmental things, and whatever are the things which are required to conserve the environment, that is the key focus of CSR. Then waste management is something which is to be very much be in the purview, whether you are just floating your waste on land or in rivers, or you are treating it. So hazardous waste management rule may be practiced by practicing cost accountant. It can be audited. Conservation of environment needs no emphasis, guys. We need to conserve the environment. This is an important element of corporate social responsibility. Then marketing is an area which management auditor will definitely see whether you are doing right marketing efforts or not. Okay, maybe your product is very good, maybe your pricing is very good, maybe your distribution channel is superb, you have good distribution channel across the country, maybe everything is perfect, but unless and until your marketing efforts are good, your advertisement is good, people are in knowledge of your product, unless until that happens, all your efforts are waste. That's why advertisements are given, such expensive advertisements are given, because there's a very old saying, out of sight, out of mind. If you become out of sight, you become out of mind. Therefore, advertisements are very, very important. So the management auditor will see your marketing efforts also. He will see whether you are targeting the right audience or not, whether you are marketing your products to the right audience or not. He will see that. The cost or the management auditor will see that. So marketing audit is an independent examination of entire marketing effort of the company. What is the marketing program? What are the objectives which are covered? Implementation, organization for purpose of determining what is being done, appraising which is being done, and recommending what should be done in future about the marketing efforts. So, what are the features of marketing audit? It is to be carried out at regular intervals. It is not once in a lifetime exercise. Every year, every 6 months, every 2 years, marketing audit is required, because marketing changes over a period of time. So it is to be done every year, regular intervals. Entire system and process of marketing should be taken into consideration while doing the audit. You should not leave any aspect. So selling is an aspect of marketing, distribution is an aspect of marketing, advertisement is an aspect of marketing. Sometimes promotional offers are an aspect of marketing. Everything is marketing. You should take care of everything. Then total appraisal of marketing efforts should be done. It is similar to point number 2. Then formal lines of authority and responsibility should be reviewed in marketing staff, the staff which is there, marketing head and marketing staff, the formal authority and responsibility, who's responsible to whom, that should be reviewed in marketing activity. Marketing audit covers the following broad areas. What are the objectives of marketing? What are the programs of marketing? Its implementation and organization. So what are the objectives? Objectives should be clearly established of marketing, whether you are wanting to increase your market size or whether you are wanting to increase profitability. These are the two different objectives of marketing. Which one are you pursuing? You need to clearly establish it. Then program. What are the steps that you are taking? What are the plans that you have made for marketing? Plans, programs, marketing program. Implementation, you will then implement the marketing program. Organization, then you will organize your marketing plan in a way, execute it in a way that it reaps benefit for the organization. Oh, next is very, very important topic, guys, and it has been recurring since ages. Since ages, it has been recurring. One of the favorite topics of the examiner, energy audit. Energy audit. Okay. So, guys, I'll explain energy audit using this particular chart. Okay. Suppose you are an organization who's using various energy equipments which is consuming energy. Okay. Now, these various energy equipments, if you do some minor changes in this equipment, their energy consumption will reduce. Just do minor changes. For example, use a solar panel to generate electricity. If you are located in a state where electricity is in abundance, like Gujarat, you can have loft insulation on your ceiling, so that your energy is conserved, your temperature effect is minimized in your organization. You can use thermostat to set low temperature inside your organization. Then you can switch off the appliances when not in use. So these are certain simple steps which you can take to conserve energy. But guys, more often than not, we are so careless. Forget about office. When we are in our home, we are so careless that we don't bother to close the lights and fans and all the electronic equipments. When we do brushing in the morning, then our tap is running water. 1 to 3 liter water runs for just brushing because our tap is open when we are brushing our teeth. We are so careless. Energy audit aims to check this carelessness of the company and to infuse some energy efficient techniques. Like guys, for example, the old kind of bulbs which we used to use in our house, those yellow light bulbs, you remember those yellow light bulbs which had a wire connecting other wires inside the bulb? Those are very, very energy inefficient. Please use LED bulbs in your homes to be energy efficient. So this is one area which the management auditor will definitely see in your organization. So the entire aim, the objective of this particular audit is to institute energy efficient programs in the organization. Conservation opportunities are to be identified. Conservation of energy should be done by the organization. That is the objective of this energy audit. And yes, management auditor will definitely check this particular aspect of your organization. This is known as energy audit. Wherever energy saving is possible, wherever there's an opportunity to save energy or reducing wastage of energy, it will be adopted by the management auditor. This is energy audit. Okay, sir, got it. What are the functions of energy audit? Quantification of energy cost and quantity. How much energy is being consumed, you will quantify that. Then we will qualify which product is consuming maximum energy, which department is consuming maximum energy, which consumer is consuming maximum energy. We will correlate the trends of production and activity to energy cost. We'll focus on possible sources of conserving energy. Then we will institute those energies, like these are the sources of reducing energy consumption. So guys, these are the elements of energy audit. Next is productivity audit or efficiency audit. Guys, this is very closely related to operational audit. Okay, we are doing operations. Okay, we need to ensure that our operations are done in a perfectly optimized manner, in an efficient manner. So productivity should be high in our audit, in our working, that is to be ensured by us. So productivity audit or efficiency audit aims at increasing the productivity and efficiency of our organization. For example, raw material is being bought 2 times a day, once in the morning, once in the evening. Okay, raw material we are purchasing. Half of the truck goes is bought in the first half of the truck is bought in the second half. There's no rocket science in suggesting to that company, why are you sending the truck twice? Send the truck once and load it fully. Why are you loading it half in the morning, half in the evening? Load the truck fully once in a day, maybe in the afternoon. You will save your cost. No rocket science in suggesting this. This is known as productivity or efficiency audit. We need to increase our productivity. We need to increase our efficiency consistently. Consistently, we need to increase the productivity and efficiency of our operations. And that is why productivity audit forms core of management audit. This is the core of management audit. The ultimate area where management audit focuses on is productivity and efficiency, and yes, it is closely linked to operational audit. Okay, so this is productivity audit. It is basically the analysis of productivity of resources. Please underline these lines. Analysis of productivity of resources. How efficiently are the resources reaping benefits? That is the productivity audit. Okay, so this is the difference between economy, efficiency, and effectiveness. You can read it. It's very, very simple. So what are the twin objective of productivity audit? To obtain optimum results and to improve on benchmarks. Whatever targets we have set for ourselves, what are benchmarks? Benchmarks are targets. Whatever targets we have set for ourselves, we need to achieve those targets, and whatever results we want to attain, that should be attained. Audit would generally comprise of comparing the performances, guys. Okay, actual return versus expected return, optimum utilization of resources, benchmarks should be achieved. Now, what are the areas where productivity audit functions, or what are the ratios which productivity audit uses to analyze? Guys, very simple ratios which we have done in our costing and cost audit also, chapter number management reporting chapter. There also we have done ratio analysis, capacity utilization, productivity analysis, material consumption analysis, capital employed analysis, gross profit, net profit, debt equity ratio, net worth. All these are ratios which will tell whether we are productive or not. Productivity is definitely a function of production versus profits. So these ratios will be very useful in our productivity analysis. So productivity audit is nothing but analyzing the productivity of an organization. Now we come on to a very, very important aspect of our syllabus, which is propriety audit. Propriety audit. Okay. Now, I'll give you an example to explain propriety audit, and then it'll sound really, really easy to you, because it is actually very, very easy. Okay. Propriety audit is very, very easy and straightforward. Okay. Now, I go to audit. I go to an audit, and that audit is of Reliance Industries Limited. I go to an audit of Reliance Industries Limited, and that audit is carried out by me. And I have learned that Reliance Industries Limited have bought glasses for their board of directors meeting. One glass is for 50,000 rupees each. One glass is for 50,000 rupees each. They're showing me the bill. They're showing me where they've purchased from. They purchased is from Swarovski crystal, which is very, very expensive. They want to drink water in a glass which is worth 50,000 rupees each. Board of directors have taken this decision, and they have bought glasses which is worth 50,000 rupees each. Now, as an auditor, can I ask them that, why have you done such a big blunder by purchasing such expensive glasses? In my home, the glasses are worth rupees 5 each. We get glasses worth rupees 5 each or 10 rupees each. Why have you spent 50,000 rupees for one glass? Can I ask this question from a person who's owning a private company? Answer is no. It's his company. You are no one to challenge the aspects which are dealing with rationale of any expenditure of that particular company. You are no one to challenge it. Who are you to ask the rationale of a particular expenditure? Management wants to spend in that particular area, he's spending in that area. You are no one to challenge the rationale or prudence of an expenditure in a private concern. However, in a government concern, guys, if you are doing audit of a government company, like if you are doing audit of say PSU, some Maharatna, some Navratna company, then definitely you can ask the prudence of a particular expenditure, because that is public money. That money is public money. And a government company cannot spend their money as it is, without considering what is right or what is wrong. Government company cannot do that, because that is public money. So what is propriety audit? Propriety audit is nothing but prudence audit. And prudence audit is typically relevant for government audit. Now, my question to you is, if you are the management auditor and not the statutory auditor, let me repeat, please hear the question very, very carefully. If you are the management auditor and not the statutory auditor of a particular company, then can you ask the prudence of an expenditure from a private company also? Answer in the chat box. Answer in the chat box. Let me repeat my question. If you are a management auditor and not a statutory auditor, I've already told you statutory auditor cannot raise question on prudence of an expenditure. It is businessman's perspective. What has he spent on what? Okay. You cannot challenge why have you spent so much of money? This thing is available in cheap. No, you cannot do that. If that is a valid expenditure, you have to approve it. Okay. As a statutory auditor. But if I'm a management auditor, can I raise question on prudence of a particular expenditure even when I'm auditing a private company? Can I do that? Yes or no in the chat box. I want yes or no in the chat box. So propriety audit is typically relevant for government audit. But if I'm a management auditor, then can I apply propriety audit in private concern also for a private person? For Reliance, can I ask this question? Answer is a clear yes. Sushmita Sharan. Sushmita Sharan, very good answer. Very good answer. So guys, management auditor is under no bound to not to talk about propriety. It can challenge your prudence. Management auditor can challenge your prudence. Statutory auditor cannot challenge your prudence. Management auditor can challenge your prudence. So the meaning of the word propriety means whether the expenditure which meets the test of public interest, commonly accepted customs and standard of conduct, particularly as applied to professional performance requirement of government regulations and professional codes. So only in government organization there is a concept of prudence. There's a concept of a conduct which is as per the authorization metrics, or which is as per the norms which are given by the management. Okay, I've got many more answers. Wow, everyone is saying a yes. Superb. Very good. Everyone's saying is yes. Absolutely. Absolutely correct you are. All right. So, guys, propriety audit is a very, very important element of management audit, because management auditor is in no bound to not to challenge your prudence. Management auditor is there to challenge your prudence. Management auditor is there to challenge your prudence. That is the role of management auditor. Whether planned expenditure is designed to give optimum results, whether the expenditure is directed towards results, whether the size and channel of expenditure were designed to produce best results, whether return from expenditure is appropriate, whether you are getting appropriate benefit of the expenditure or not. All these things can be asked by the management auditor. Management auditor can question your prudence. Okay. Now, what are the three important, or rather four important elements of this prudence concept of propriety audit? First of all, whether the expenditure should not be more than what occasion demands. It should not be excessive. Expenditure should not be excessive. Then, expenditure should be sanctioned. It should be approved by the relevant authority. That is the second point which you need to consider as a management auditor in huge expenses, in the expenses which are heavy expenses. So, the expenditure should not be utilized for benefit of a particular person. The expenditure should not be utilized for particular benefit of a particular person. So in a private company, a board of directors buying a car, it is using company's funds to buy a car. Not allowed. Not allowed. Then amount of allowances should be regulated. Amount of allowances, whatever benefits are being received by the top management, they should be regulated. So as management audit is direct challenge to management. Simple. Management audit is a question mark to the management in any possible way. In any possible way. So propriety audit forms part of management audit also. Propriety audit is not a part of financial audit. Financial auditor, cost auditor cannot challenge propriety. But management auditor can challenge propriety, can challenge prudence. CSR audit. Yes, in this particular audit, guys, we need to see whether the CSR program is appropriate or not. So what are the CSR programs? Let us read it in brief. Human rights, business behavior, human resources. These are certain elements of your CSR program. So just read through these areas of CSR program and you'll be able to understand them. Nothing really difficult about it. Yes, very, very important. Guys, in 2013, CSR has become mandatory. So earlier, CSR was optional. Okay. So a company wants to contribute to society or not, its companies will. But now, after advent of Companies Act 2013, CSR is mandatory. You have to mandatorily spend out on your society if you want to continue business. Okay. It's like forceful donation. It's like forceful donation. You are forced to donate. Okay. That is corporate social responsibility in case of Companies Act. Section 135 is the section which deals with CSR in case of a company. And yes, 2% of average profit of the company is to be spent mandatorily on CSR. So guys, Ministry of Corporate Affairs have given certain areas where CSR expenditure can be done, like eradicating poverty, promoting education, promoting gender equality, ensuring environmental sustainability. All these things are the as per the Committee of Ministry of Corporate Affairs. All these things are very, very directed towards society. So expenditure should be done in these respect only. So guys, you can remember any 6 of these. Okay, don't remember all, but remember any 6 of these. All right, and the last checklist, which is last topic, which is a very, very important topic of our syllabus, guys. Sample checklist for various functions of audit. Guys, checklist can come in your examination. It has been repeatedly coming in your examination from past. What do you mean by checklist? What do you mean by checklist? Guys, when you are studying a particular chapter, a subject like cost and management audit, whenever you study a particular subject like cost and management audit, then guys, you have an index in front of you. You tick mark on that index. that yes, I have covered the rules, I have covered the basics of management audit, I have covered the chapter on cost accounting standards, I've covered the chapter on the professional ethics. That is a checklist. Similarly, while auditing different functions or while auditing different elements of your financial statements or your management audit functions, you prepare a checklist that yes, I've checked this point in my management audit purview. This is known as checklist. What all things you have to check, and you will put a tick before whatever things you have checked. Okay, that is known as a checklist. So it is not a very difficult thing, it is a very simple thing. What steps can you think of doing a particular audit, and whether you have done those steps or not, that is the simple checklist of audit. Let's take an example. Sample checklist for management audit. While you're doing management audit, what steps would you consider doing? Okay, now you will take a production plan. First of all, how is the production plan prepared? You will see whether production plan which is prepared is adequately prepared or not. Okay, then what should be the product mix? What should be the mix of two products which you should consume? What is the product mix? What is the optimum profitability which you want to attain, whether you have checked that or not? Okay, what is the mix of standard product or the tailor-made products? What is the mix in your sales? Whether the infrastructure like machinery, material is adequate or not, so that your production is uninterpreted. So you need to check each of these points. As a management auditor, you need to check each and every point in the organization. Then, are there constraints to achieve maximum capacity utilization? Why are you not able to achieve the maximum capacity utilization? Why are you underutilized? Okay, what is the percentage of scrap waste in your production? Is it reasonable? Is it unreasonable? So guys, these are certain points that you will check while you are conducting management audit of a particular organization. And yes, need not remember all of them, remember any 10. And guys, let me tell you, don't worry. If you read these thrice, you will automatically be able to remember. It is nothing very complicated. Students say, sir, checklist कैसे याद होगी? Checklist तो याद हो ही नहीं सकती, इतने सारे point हैं, इतने अलग-अलग point हैं. Sir, checklist कैसे याद करें? It is very difficult to remember checklist. It is not difficult to remember checklist. It is common sense. It is common sense. Please understand this fact. Checklist is only common sense. You have studied management audit chapter. Now, whatever you have studied management audit chapter, summary of that is given in this checklist. That is the point. Okay, sir, got it. Similarly, guys, there is a checklist for purchase management. So purchase function, what is the purchase function? What is the purchase policy you need to see? How the purchase requirements are told in the purchase schedules and the department. How the suppliers are selected. How the purchase authorization happens. How the suppliers are, whether suppliers are dependable or not. What are the price trends? All these things are there in this particular checklist. Similarly, when you are dealing with personnel management, when you're auditing personnel management, what is the organization of personnel department? How is personnel department, HR department, hierarchy is there? What is the hierarchy? Is it adequately staffed? What is the organizational hierarchy for your entire organization? What is the promotion policy? What is the remuneration policy? Okay, all these things are required to be seen. So just read them thrice and you will be able to understand and remember the major points. The only ask is to read them thrice. Okay, these are the checklist of individual areas of audit, like inventory control function. Okay, what are the checks? What are the checklist? So these are the the control points. Okay, now let me tell you, this time which you are having right now, the 1 week which you have now, this is an opportune time to read these checklists, because these checklists, if you revise again and again, whatever you have revised in past, that will be out of your mind. Okay, if you read them again and again, then you will be definitely be able to remember these checklists in the examination, and you will be able to perform well in the examination. So don't worry about this checklist. One such checklist I will also teach you in the next chapter, internal controls. Okay, they are also not difficult. Please remove this notion from your mind that checklists are very, very difficult. Checklists are not difficult. Please remove this notion from your mind. It is a false notion that is there in your mind. And yes, from checklist, at least one question will definitely come in the examination, whether from chapter number 9 or whether from chapter number 10. Okay, guys, so that's all for this particular chapter. And yes, are we energetic enough? How's the Josh? How's the Josh, guys? How's the Josh? Are we energetic enough? We have covered almost 60% of our theory portion, guys, and we are equipped for examination to cover the 60% of our portion. And yes, now we'll be moving towards the internal control, internal check chapter, and that chapter is by far even more important than management audit. Internal control, internal check, that chapter is even more important than management audit. It is a very, very important chapter of your syllabus, which we are going to start now. How's the Josh? Are you feeling tired? Are you feeling energetic? Okay, Samir Kundra is there. Samir Kundra, have you started doing CMA? Huh? Samir Kundra, I'm a fan of you. You are not a big fan. I'm a fan of you. Okay, guys, let me tell you, Samir Kundra is my colleague when I used to work in KPMG. Samir Kundra is my colleague and a regular follower of my YouTube channel. All right, how's the Josh, guys? How's the Josh? Should we continue with our marathon lecture of the next chapter? Next chapter is internal controls, internal weaknesses, and internal audit. And yes, slightly low, sir, to be honest. Obviously, Ram, it is tiring, undoubtedly. Reading theory back to back. Reading theory back to back is definitely tiring, but we have to make our spirits strong, because this will fetch us 30 marks. This will fetch us 30 marks. 30 marks will be ours if we do this theory portion. Okay, so important to do this theory portion, very, very important. Okay, so before we start our next chapter, let's take a small break. We'll be meeting after the break, and then we'll be starting our next chapter, which is internal controls, internal checks, internal audit, etc., etc. So we'll be meeting after 5 minutes, maximum 5 minutes break. Hello. Can you hear me properly? And can we start the session back? Are we all energetic? Please respond on the chat box. Can we start the session? Can we continue? And are we energetic enough? Are we superbly charged to clear our CMA final examination? Please message on the chat box. Yes, I am able to hear you properly. Sorry, I'm able to see your chat messages. So please message on the chat box whether we are energetic and whether we should start the session back. Are we ready to continue with our next topic? Yes, everyone's saying yes, recharge, sir. Yes, guys, even a 2-3 minutes break, recharges you. 2-3 minutes break. Yes, it's like a power nap. Power nap, recharges you completely. So this 2-3 minutes of break is a power nap, even for you and for me also. Continuously speaking for 2 hours, 3 hours, make a toll on your throat, and just taking a power nap really helps. It has helped me. Now I can teach you further. Till the time we complete our entire course, we can teach you further. We can start our conversations. Yes, let's rock it. Ram Narayan says, let's rock it. Yes, let's rock it. Absolutely, guys. Let's rock it. All right, let's start. Internal control, internal audit, and operational audit. The most important topic of our theoretical part, guys. And from this particular part, in your December 21 attempt, almost 15 marks question was asked from this particular part. This particular portion was 15 marks in your examination. So very, very important portion of your examination: internal controls, internal audit, and operational audit. Before I start this chapter, please understand the meaning of internal controls. What do you mean by internal controls? And I had just now taken an example. I'm taking that example again to start your to start the chapter. Okay, what do you mean by internal controls? Okay, guys, internal controls, I've taken an example today only. In the morning I've taken this example. I'm repeating that example. So if Saurabh and Sushmita are in relationship with each other, Sushmita wants to make sure that Saurabh goes to coaching class daily in the morning. He is in the coaching class for a long period of time. She wants to ensure that there's no hanky-panky stuff going on between Saurabh and someone else, and she wants to audit this entire transaction. She has two ways. Number one, checking the internal controls. What are the internal controls? What time did Saurabh leave home? What time did he reach office? What time did he reach the coaching institute? What time did he leave the coaching institute, and what time did he reach back to home? These are the checkpoints. These are the control points which Sushmita can check to audit this particular transaction and to be sure that yes, Saurabh is going outside only for coaching. These are internal controls. Similarly, management of an organization establishes such internal controls. For example, whenever raw material is coming inside the factory, there is a register in the entry gate. That register will be filled with the amount of raw material which has come in. When that raw material reaches to the production floor, there is a register on the production floor which will tell that this much raw material has reached the production floor. Whenever that is converted into finished goods, it is sent to go down. There's an entry which is done in the go down that this much has been received as the finished good. Whenever the finished good goes out of the factory, then factory gate has a record of how many finished goods have been sent outside the factory. So if I want to make sure that the raw material accounting is perfect, then I can just see these checkpoints that yes, 100 kgs has been written in entry register, 100 kgs on the production floor, finished goods were made. Suppose 50 products were made, 50 products reached the go down, 50 products were sold. If I tally these controls, then I'm fairly reasonably sure that the transaction has flown in well. The transaction is right. I need not go into details of that particular transaction. If the controls are working fine, then I need not go into the details of that particular transaction. I just need to figure out whether controls are working fine or not. These are the internal controls. And management makes sure that these internal controls are instituted in the organization so that the organization is working fine, so that organization is accounting well, their systems and procedures are doing, everything is doing well. The management institutes these controls at a relevant point in time. These are known as internal control. I'll give you another example. There's a person. I have a big store. Okay. I sell clothes. There's a person who collects the cash at the end of the day and deposits it to bank. Now I have a fear that, that person collects cash worth rupees 1 lakh and he's depositing only 90,000 in my bank. And the next day he would say that, oh, I collected cash of 90,000 rupees only. So now, guys, to check or to have an internal control with this transaction, I will employ someone else, and this particular person will only collect cash, count it, put it in that cash book, hand it over to the person who's going to the bank, and that person will deposit the cash to the bank. So if I segregate the duties, if I split the duties between two people, chances of fraud reduces. Chances of error reduces. Now two people are involved. So one person cannot do that fraud. That fraud cannot be committed by one person. I have split the transaction into two people. So guys, such activities are also known as internal controls. So we have certain internal checks which we employ in our business to ensure that all the accounting entries, all the business transactions are recorded properly and there is no fraud which is happening in the company. These are known as internal controls. All right, sir. So let's start. Internal controls are certain checks and procedures installed by the management. Very, very important. Who installs these checks? Management installs these checks. Installed by the management to prevent financial fraud or misappropriation of assets. I have installed these internal controls in my business so that my entries and transactions are checked by some other person also. Entire transaction is not done by one person, it is done by two people so that they are checked properly. In other words, internal control system can be defined to be the policies, practices, procedures, tools designed with the following objectives. What are the objectives? That everything is done with proper authorization. Everything is recorded promptly in the correct amount and correct accounting period. Assets are safeguarded. No one is stealing my assets. Like my cash is not being stolen by my staff. Compliances are made. Adequate compliances are made. Compliances regulations are followed. TDS is being filed on time. My returns are being filed on time. Every compliance is made on time. Any negative event, crime, fraud can be controlled and can be managed if I have proper internal controls in place. So these are the internal controls definition. A process designed, implemented, and maintained by those charged with the governance, who is the management of the company. Those charged with governance is the management of the company. So management of the company infuses or implements certain processes. What is the objective of that process? Financial reporting should be done properly. Accounting entries should be done properly. All the accounts should disclose the true amount and account. Compliances of law and regulation should be done properly. Effective and efficiency of operations is done, and assets are being safeguarded. Scope of internal control. What is the scope of internal control? Which means, what are the areas of internal control? What are the gambit of internal control? What all will internal control cover in its purview? So scope of internal auditor, area of operation of internal auditor are as under. What will internal auditor see? What all things will internal auditor see? So guys, internal auditor will see your internal control on everything, starting from financial and operational information. The first thing which internal auditor will see will be your internal controls regarding financial operations. So what are the internal controls? Internal controls will be that, all the accounting entries should be put in the system. All the accounting entries should be put in the system. That is the first internal control. And how will you ensure that all the accounting entries is put in the system? Reconciliation. After every month, your bank should be reconciled with your bank as per books. Some companies do it on a daily basis. After the end of the day, your bank balance in your bank account should match with your book bank account. The bank balance which is there in your books of accounts, it should match with your bank balance in your bank. There's a reconciliation which happens every day in many companies. This is one of the example of internal controls, and that too financial internal control which is related to finance. So operational and financial internal control is the first aspect of internal control. So internal control will cover, number one, financial aspects. Your profit and loss account should be perfect. Your balance sheet should be perfect. Your assets value should be perfect. We need to control your assets. We need to control your bank balance. We need to control your balance sheet. That should be absolutely perfect. So that is the first internal control. What is the second internal control? Compliance with law, policies, procedures, everything should be adequately done. So, to deposit TDS on 7th of the next month, this is an internal control with respect to the compliance of law. So, guys, I will design a system whereby my CFO will get a prompt on 5th of the next month that TDS has not been deposited. Alarm will buzz off that TDS has not been deposited. This is an internal control on compliance of law, policies, plans, procedures. Your return of income should be filed up to the stipulated date. Again, buzzer will be triggered. This is another way of controlling your compliances with law. So the second aspect which internal controls will see is your law compliance. First aspect is your financial and operating compliance. Second will be your compliance relating to law. Third is safeguarding of asset. Internal controls should be such that your assets are safeguarded. They should not be stolen by your employees. Suppose you have 100 shares in your organizations, okay? You have 100 shares, okay? Now, the 100 shares are, there's only one person who buys the shares and maintains the shares, okay? He takes 10 shares out of the company, he takes it to your home, to his home, sells it. That person is responsible for buying and maintaining shares all through, okay? He will buy another 10, he will put in the factory, no one is there to check. But if we have another person who checks, counts the number of shares on a regular basis, he will be able to identify that 10 shares are missing. So we need 2 people in every transaction. We need 2 people in every transaction. That is the bottom line of safeguarding of asset. And internal control should be there to ensure that all the assets are adequately there in our organization. Nothing is stolen by the employee sometimes, okay? It is stolen. Internal auditor should verify existence of assets, should review the means of safeguarding assets. Economic and efficient use of resources. This is one important aspect of internal control. We should be able to maintain our input output ratio to a specific level. If input output ratio goes below a specific level, it should automatically give information to the production in charge. This is an internal control to ensure that we are efficient and effective. We should not waste our resources. Then accomplishment of established objectives and goals for operations. Whatever objectives we have designed for our operations, those should be effectively achieved by us. That is another important aspect. That is another important thing that we need to ascertain, that we need to see in our achieving of goals. Then types of internal controls. Internal controls are necessary checks and balances to keep a check on what we have done, what all we need to do, and whether it is done properly or not. Okay. Internal controls are of following 4 types. We can control our 4 things using internal controls. What are those 4 things? First of all, we can control our administration. Guys, the managerial administration that we are doing, the decision making which we are doing are around our administration. Administration means whether everything is being done fine or not, whether maintenance of books of accounts is being done suitably or not, whether the production manager is doing his work rightly or not. All these things are administrative stuff. First internal control should be administrative control. We need to ensure that our internal controls are so strong that if there's any problem in the administration of a particular thing, it should directly reach the top management immediately. For example, we produce 100 units daily. One day we produce only 80. Now there should be a mechanism whereby we need to analyze and see why did we produce 80 units that day? Why? There should be a control to this 80 units production because it's a loss for the company. On the next day, we should be able to produce optimally. So administration is first area where internal controls are very, very important. Next is operational area. Whatever operations we are doing, their internal controls are very, very important. You must have studied EOQ. Do you remember EOQ? Economic order quantity that we have studied in our costing. So guys, EOQ will ensure that we never run out of supplies. EOQ will ensure that there should be a adequate amount of inventory always there in our inventory. That will ensure that we never go out of supply. So that is an operational control. Financial and accounting control. I've already discussed this particular aspect with you. When we reconcile our bank and our books daily, we will be able to know that yes, this accounting entry has not been put by our finance in charge in the books of accounts. We'll be able to know it. So things like reconciliation. Things like giving one responsibility to two people will ensure financial and accounting control, safeguarding of asset, prevention, detection of fraud, etc. Compliance control. Compliance mean the laws and regulations, whatever laws and regulations are there in the organization, those laws and regulations are complied with or not. This is the compliance control. For example, TDS is being deposited on time, then the laws are being followed on time. All these are compliance control. So these are four areas where internal audit can work, internal controls can work. These are the four areas which are very, very important. And these four areas are important for our internal controls. All right. Then to ensure internal control, following factors must be considered. So guys, how internal controls are done? Okay, I've given you examples of internal controls, like I've given you example of segregating the duties. I've given example of using EOQ as the method. I've given example of using input output ratio. If it falls below a certain point, it directly triggers an alarm without top management. I've given you certain examples of how internal controls are done. These are certain additional examples of how internal controls are done. Number one, segregation and rotation of duties. Very, very important. Very, very important. One person should not handle the entire transaction himself. Should be initiated. One person should not handle the entire transaction himself. So if amount is deposited to bank, collection of amount should be done by person A, deposit should be done by person B, so that there is two times checking of the same transaction. Segregation of duties. Second is rotation of duties. Rotation of duties means that, you know, if one person is handling cash in first 6 months of the year, then another person should handle cash in next 6 months of the year. Rotation of duties. Because if a person remains on one duty for a longer period of time, he will be in knowledge of various sources of avoiding compliances. He would have more knowledge and experience of how to do fraud. Yes. So rotation of duties is required and segregation of duties is required. One person should not be allowed to carry on a particular duty for a longer period of time, because if he is allowed to carry on a duty for a longer period of time, chances of fraud increases. If he knows that after 6 months someone else will come in his place, he will not do fraud. This is the first aspect of internal control: segregation of duties and rotation of duties. Competence and integrity of people. Now this is very, very important, guys. For your important functions like cash collection, your banks, your debtors collection. Okay. For these important elements of your business, hire competent people, people with integrity, people who are educated, people who are highly educated, like chartered accountants, cost accountants, company secretaries. Because guys, those people will be afraid of doing frauds. They will not do fraud very easily. They will be afraid of doing frauds because they know that if they do fraud, then they will be they will be fired from job, and their degree will also be snatched away from them. So hire people who are competent, hire people who have integrity, hire people who have appropriate degree and appropriate experience, hire people who are integral. Okay. So competence and integrity is the key point in hiring people for certain key areas. So you should have people who are competent, people who have integrity, who are honest enough. They should be hired for special things. Appropriate level of authority. So to ensure that the internal controls are working fine, authority responsibility matrix should be determined in a fair manner. Authority responsibility matrix means everyone should know whom is he reporting to, and that person should exercise authority on the other person, and that person is always, if he's exercising authority and supervising the other person will not incur fraud. So adequate level of authority should be there. Everyone should be accountable to someone else. So each one should be accountable to someone else, and everyone should know that he has someone to supervise. So accountability is very, very important. Just give me 1 minute, guys. Okay. Accountability is another important aspect of internal control. Everyone should be accountable to some other person so that he knows that someone is supervising me, someone is watching my activities. If this watching is not there, then people tend to commit fraud. So accountability is one important element of internal controls. Internal controls should have properly accountable. So everyone should be accountable to someone else so that no one thinks that I'm the king in the company and I can do anything. No, no one can do anything in the company. No one is king in the company. Okay. Then adequate resources should be there. Now, if you want to have internal controls, adequate internal controls, you should have adequate resources, guys, because each and every transaction, if you pass it through two people, then you should have manpower. You should have finance, you should have equipments, materials to have internal controls. So yes, internal controls necessitate adequate resources. If you have adequate resources, then internal controls is possible. Supervision and periodical updation. It is very, very necessary that, controls should be updated after a point in time. Controls also become redundant. Control also become outdated. For example, you have a banking channel, you have a cash deposit mechanism, and you have a very good control in that cash deposit mechanism. Now, after a point in time, you stop taking cash from your customers and you turn entirely on an online mode. Then will that old control be relevant here? No. So you have to update your controls on a regular basis depending upon your businesses and your market's demand. So controls will be updated on a regular basis. Now, there are certain limitations of internal controls. Yes, internal controls are very, very important. In fact, pivotal. Internal controls are non-compromisable. They have to be done in a proper manner. Internal controls are very, very important, undoubtedly. But there are certain limitations of internal controls also. Certain drawbacks of internal controls. What are the drawbacks of internal controls? Drawbacks are cost. Internal controls come with a huge cost. So to design internal control and implement internal control, it is a costly affair. So cost benefit analysis should be done for the internal control. So that is an important drawback of internal control, that it includes additional cost. No control for unusual transaction. So generally internal controls are designed for the usual transaction, like banking transaction, cash transaction, purchase transaction, sales transaction. Generally these transactions have internal controls. Now suppose if you want to sell your machinery, internal controls around selling machinery will not be there, because selling machinery is a once in a lifetime kind of a event. It's not a regular event. So there will not be internal controls for exceptional items or exceptional transactions. So they will go undetected. They will go without internal controls. Human error is anytime possible in internal controls as well. Human judgment and decision making is definitely possible in internal controls. Also, guys, internal controls can lapse because of human error. Collusion among employees. This is a very, very important aspect. Collusion means combination. So I'd give you an example that if you want to deposit your cash in bank, then employ two people. First person will collect the cash, second one will deposit the cash. This way you will be able to check it the amount twice, right? But guys, what if both of them shake hand? Both of them say that yes, okay, we'll do this fraud in a combined manner. So if they decide to do this fraud in a combined manner, then segregation of duty internal control fails. If both of them say yes, we want to do this fraud and we will cooperate with each other in doing this fraud, and they combine hands, then there's a big problem. So yes, collusion among employees is a drawback of internal control. Abuse of authority. Guys, the problem with internal control is that it is installed by management, and management can anytime lapse a control. So if time is less, then management can say that one person will only collect the cash and he will deposit the cash in bank if time is less. So sometimes internal controls are lapsed by the management itself due to lack of time or due to lack of patience. Management colludes the internal controls, and this is abuse of authority which management shows. This will result in risk coming in your financial statements. It will be a risky affair. Your financial statements might be in a risky proposition. Then inadequate procedure. If the internal controls are inadequately designed, then compliance will result into a bad drawback. Manipulations by management. Management might manipulate the transactions, estimate, judgments required for preparation of financial statements. Internal controls might be tweaked by the management of the company. Internal controls and statutory auditor. Now, very, very important point, guys. Internal controls are seen by the statutory auditors very, very carefully. Why? Because CARO reporting is there. CARO is Companies Audit Report Order. So statutory auditor is required to report in the audit report whether internal controls are appropriate or not. Okay, so that necessitates the statutory auditor to test the internal controls whether they are working fine or not. Okay, then Companies Act also requires the auditors to comment on the weaknesses, if there's any weakness in internal control. Then the auditor also identifies operation weakness. If there is any internal control weakness, then the auditor spots weakness in the systems and procedure also. If there's any weakness in internal control, then statutory auditor will say this your operation is weak. That is also a. Then auditor shall include a written communication to the management, the statutory auditor, about the internal control deficiencies. This is also a role of the statutory auditor. So guys, statutory auditor relies on the internal controls also. Let me tell you, statutory auditor, if internal controls are strong, then statutory auditor will work less. Auditor will do less audit procedures if the internal controls are strong. If internal controls are weak, statutory auditor will do more work on the audit. So that is the important aspect of internal controls. Yes, guys. All right, internal controls and audit committee. Yes, guys, the main objective of audit committee is to study the internal controls. Okay, that is the main objective of audit committee, is to see the internal controls whether they are working fine or not, and whether the auditor is satisfied that internal controls are fine or not. Now, what do you mean by audit committee, guys? Audit committee is a specialized committee which is created on only a specific type of company. So this is the definition which is there for the companies who are required to create their audit committee. Audit committee is required to be created only by this sector of people. So a company should have a separate department as audit committee, which will include the independent directors, which will include the finance director, etc., etc. So what is the role of audit committee? Audit committee is not finance department. Please understand, audit committee is not finance department. Audit committee's role is to overview the audit, whether audit is being done fine or not, whether the auditor's grievances, auditors' qualifications are being resolved or not. That is the role of audit committee. It's a separate committee, apart from finance. Finance is a different committee. Audit committee is a different committee. Okay. So internal control and its relationship with the audit committee. So audit committee has to evaluate the internal and financial controls and the risk management system. This is the responsibility of the audit committee. Then audit committee will review performance of statutory and internal auditors and see whether the internal auditors comments and statutory auditor comments are resolved or not. Third, it will review adequacy of internal audit function. Whether internal audit function is doing fine or not, that is the responsibility of audit committee. Discussion with internal auditors for significant findings and follow up thereon. What are the observations of internal auditor and how can they be rectified? This is role of audit committee. Reviewing finding of internal investigations by the internal auditors. Statutory auditors discussions are also responsibility of audit committee. So audit committee is only focused on auditing. Audit should be done in an appropriate manner. Audit should be completed perfectly, and audit should be done in an unbiased environment. That is the whole objective of the audit committee. Therefore, audit committee is very, very useful. Next, features of a good internal control system. So what are the features of a good internal control system? When will I say that internal control system is appropriate? Internal control system is absolutely fine. When will I say that? What are the features of a good internal control system? That is what we are going to study. There should be a proper organization structure. If the structure is it is well defined, automatically it's a control that everything will go fine. If everyone knows the responsibility and accountability matrix, if everyone knows who's my senior, who's my junior, okay, this hierarchy is very well defined, automatically it's an internal control. Automatically things will go fine. So first quality of a good internal control system is that there should be a proper organization structure. Second, authorization procedures should be well defined. Everyone should know that, which transaction should be authorized by whom. The structure of authorization and the entire procedure should be well defined. Everyone should know what is to be done, how is it to be done. Internal checks should be perfect. So the accounting procedure should be designed in such a manner that no single person is authorized to carry all the operations involved in a transaction. So any one transaction should not be done by a single person. So the responsibility should be divided between two people of a particular transaction. That is important. So accounting procedure should be there that no single person should carry on one transaction. Okay, then suitable people should be there in your system, like competent people, honest people should be there in the system. Their qualification, their experience, their personal characteristics should be judged while keeping them in the organization. Internal audit system, should be there, where an independent person is coming in the organization and seeing whether the internal controls are working fine or not. Internal audit system should be very much in place, and internal audit is definitely something which looks at the internal controls. Okay, and now we are going to start internal audit only. Okay, so guys, let me tell you, internal control comprises of two things: internal checks and internal audit. If your internal checks are strong, internal checks means everyone is checking transactions of each other. If your internal checks are strong, and if your internal audit is strong, cumulatively it will make your internal control system strong. So internal control is a accumulation of two things: internal checks and internal audit. And now we start with internal audit. And guys, as you are aware, now again, first of all, please mark this topic as very, very important. From an exam standpoint, it's very, very important. Now, internal audit is not mandatory for all the organizations. Only specified organizations are required to get their internal audit done. Rest, it is mandatory for other organizations whether they want to get their internal audit done or not. Now, what do you mean by internal audit? Internal audit is the review of operations of an organization, including review of the internal control system. It improves managerial control by measuring, evaluating effectiveness of other controls by maintaining vigilant watch over risk. So what is internal audit? Internal audit is review of law and regulations, governance should be proper, operating activities are working fine or not, risk management, financial operation information. All these are aspects of internal audit. Now, person eligible to be an internal auditor. Who can be an internal auditor? Guys, internal auditor can be a chartered accountant or a cost accountant. So yes, cost accountants can also be an internal auditor. Then for which companies is internal audit mandatory? Very, very important, guys. There was a practical question which came, practical in the sense, analytical question which came from this particular aspect. Every listed company has to mandatorily get its internal audit done. See, statutory audit is done by all the companies, irrespective of their turnover, irrespective of whether they're listed or not. Statutory audit is to be done by all the companies. Internal audit is to be done only by listed companies or every unlisted public company whose paid up capital is 50 crores or more, whose turnover is 200 crores or more. Any one of the criteria needs to be fulfilled. Okay, or who has taken a loan of 100 crores or more, or who has outstanding deposit of 25 crores or more. All the unlisted public companies having these traits are required to get their internal audit done. In case of private company, turnover should be of 200 crores or there's loan outstanding borrowing of 100 crores. In case of a private company, then they are required to get their internal audit done. So internal audit is not compulsory for all the companies. It is optional. Some companies are required to get their internal audit done and some companies are not required to get it done. That is internal audit. Then what are the audit techniques which we use, which the auditors use to audit? First one is vouching. Vouching means we inspect the documents. We inspect the invoices. We inspect the inward register. Suppose if raw material has been purchased, we'll check first of all the invoice of the raw material. Then we'll check the inward register. Who has utilized that invoice? Where has it come? How much output has it produced? All these things will be vouched. Then confirmations. Confirmations are third-party confirmations. For example, if company is saying I have 1 crore rupees in bank, then I would want bank to write it in writing that yes, this company has 1 crore rupees in its account. This is third-party confirmation. If company is saying that okay, I have to take 10 lakh rupees from Mr. A, then Mr. A should give it in writing to the company that yes, you have to take 1 lakh rupees from me or 10 lakh rupees from me. These are known as external confirmations. So guys, we do not rely on what management tells us. We don't rely on what management tells us. We don't rely on that fact. We rely on evidence which is produced by the management, and confirmation is another evidence which is produced by the management. Physical examination and observation. So we physically verify the fixed assets. Okay, we physically verify the inventory. We physically verify the employees. Sometimes in call centers, I've done a lot of this thing. I've physically verified how many employees are there in the call center by going to the floor and counting, or randomly picking up some name and going on the floor and asking whether this person is there on the floor or not. I've done this a lot. So physical examination is another way of auditing. Then analytical procedures. Analytical procedures are mathematical calculation. For example, if monthly rent of a particular organization is 10,000 rupees, okay, per month, Then what should be the total rent expenditure? It should be 1,20,000 rupees. 10,000 multiplied by 12, ideally. If it is less or more, then I will ask questions from the management. This is known as analytical procedures. So analytical procedures ensure that mathematically you've done everything correctly. Then test checking. This is control test checking, guys. On a test check basis, on a sample basis, I will pick up certain invoices, certain examples, and I will vouch them. I will check them. Test checking. Inquiry. I will ask the management. Inquiry is to ask. I will ask certain people about the transactions, and they will tell me how the transactions are done. So this asking is an important element of auditing. So inquiry is another element of doing audit. Inquiry is done to management and to the people who are doing this work. Preparation of reconciliation statement, very very important, guys. If you do reconciliation statements, if you do bank reconciliations, if you do debtors reconciliation, it will give you an insight on where is the problem. Very very important aspect of auditing. Flowchart, we can use flowchart. Process transactions can be highlighted using flowcharts. Then scanning is we should read the documents which is being provided to us, that is known as scanning. Figures should be right, name should be right, all the information which is given in that document should be right. This is known as scanning. Now again, what is audit program? Guys, I've already told you, program means a plan. How many employees are required, whether they should be cost accountants or articles or CMA finalist or CMA intermediate. What is the plan? Audit plan. So audit plan is a checklist of audit procedures to be performed. It is audit work can be properly allocated to different people. Using audit program, audit work can be allocated. What is the extent of work? To what extent do we need to do the work? That is also done in this checklist. Then uniformity of work. Everyone should have adequate work. It should not be so that someone is having more work, other person is having less work. So work should be adequately split between different people. Okay, that is the objective. Planning program for the following year. So earlier years program is useful for following years plan also. It may be used as evidence by the auditor that he has done adequate work. So when you plan, then it is creating a document that yes, you've done all these things when you draw a program. So it is also an evidence of the auditor that he has done all the work efficiently. Disadvantage is that auditor becomes mechanical due to plan. If there's a set program, then it might be a disadvantage for the auditor to think beyond the plan. We will blindly follow the plan, we will blindly follow the program if we have a program in front of us. So it is a disadvantage to think more. So you will become mechanical, you will become monotonous, you will not think. Then drawing up of audit program may be unnecessary for small concern. If you have a small concern, then audit program is waste. The audit program helps in fixing responsibility, but an inefficient staff may defend themselves by stating that matter was not contained in the audit program. Sometimes staff may say that it was not written in the audit program. Why should I do it? Even when that was the most important thing to do. Logically, you should have done it because it is the most important thing to do. But since it's not written in the audit program, you've not done it. Sometimes this happens. Rigid programs cannot be laid for each type of business. So guys, each business has a different set of audit program. Rigid program cannot be set for each type of businesses. That is very true. Okay, then the difference between statutory audit and internal audit. Now guys, we'll be discussing certain differences, okay, between audits, certain different types of audits, certain differences we will be understanding. Okay, sir. Internal audit and statutory audit. So internal audit, what is the objective and scope? Scope and objective is beyond the accounting and financial records. It is also related to operations of the business. Okay, operations of the business is also included in internal audit. In statutory audit, operations is not seen. Whether operations are efficient or not efficient, not seen. Statutory audit only deals with reporting the true and fair view of accounts and the compliances, whether accounting records have been prepared properly or not. That's it. Statutory auditor will not see operations efficiency or not. Operations will not be seen by statutory auditor. Whether operations are efficient or not seen by statutory auditor. Appointment, internal audit appointed by management, and statutory auditor is appointed under the provisions of Companies Act by the shareholders of the company. Accountability, internal auditor is accountable to management and statutory auditor is accountable to shareholders. Qualification, no minimum qualification for internal auditor, but yes, a chartered accountant or a cost accountant can be a statutory auditor. Statutory auditor are of two types, financial auditor and cost auditor. Financial auditor only chartered accountant, cost auditor only CMA. Right to access books. Internal auditor does not have any such right, but he will be given the right if you want internal auditor to be effective. But Companies Act has given this right to statutory auditor. This right is there with statutory audit. Okay, continuous audit and final audit. Guys, continuous audit means it is carried on year round the year. Year round this audit happens. Like in banking organizations, audit does not happen at the end of the year. It starts from beginning of the year. Each transaction which takes place, audit is done there and then. So continuous audit means audit is done for 100% of checking is done, detailed examination is done. Final audit means it is done only on a sample basis at the end of the year, carried out continuously throughout the year. Statutory audit is carried out only at the close of the financial year. Commenced and carried out before the close of the financial year. It is commenced and carried out after the close of the financial year. Final audit starts when financial year ends. Continuous audit starts when financial year is underway. Continuous audit is suitable in cases where financial accounts are desired to be presented soon after close of financial year. So where we want to close the financial accounts very, very soon, there continuous audit happens, or even in banking transactions, the continuous audit happens. Financial statements are finalized late because audit starts after the end of the financial year. So the financial statements are prepared late. Continuous audit provides an advance notice to irregularities. So, when continuous audit happens, then irregularities are identified much before, much earlier. So it's an alarm to the management. However, errors and fraud are detected after the year end in case of final audit. Bank audit, concurrent audit is continuous audit, tax audit, GST audit, statutory audit, cost audit are all final audits. Then we come on to the working papers, the documentation which is there with audit. And guys, if there is no documentation, then we will assume that you have not done work. Documentation is good, we will assume that you have done work, you have done audit. If documentation is bad, we will assume that you have not done work properly. That's the difference between doing audit work or not. So documentation is very important. Working papers are very important with respect to audit. Working papers should be appropriate. Working papers should be kept in the appropriate manner, and working papers should be maintained in the appropriate manner. So guys, there are two kind of working papers. One is permanent audit file, second is current audit file. I'll give you example of permanent audit file. Okay, suppose there's a rent agreement which is valid for 5 years. Now, in the first year when audit happens, you will ask for rent agreement from the management of the company. They will give you rent agreement. In the next year when you come again, then you will again ask the rent agreement to the management. They will say that we had given you in the earlier year. Why don't you refer to that? You will say that, oh, that was in my earlier file. That earlier file is gone now. That was of the earlier year. So guys, two files are maintained. One is permanent audit file, which will contain all the documents which are used regularly year on year. Second is the current audit file. That audit file will contain only those documents which are used for the current year, like MOA, AOA. These will be used for more than one accounting period. So it will be kept in permanent audit file. And any annual correspondence, any board minutes, general meetings, this will be used only for one particular year. So they will be kept in current audit file. So internal controls review, this will be kept in permanent audit file. Copy of management letter, current audit file. Analysis of significant ratios and trend, permanent audit file. Analysis of transactions, current audit file. So current audit file is the file where only one accounting period related documents are kept. Permanent audit file is the file where more than 1 year's accounting documents are kept. The next is, what is a notebook? What is an audit notebook? Guys, in a very, very simple term, the register which you have, right? You have a register. Whatever I speak, you write in that register. Same is the audit notebook. It is the same audit notebook. You carry a register, and whatever significant findings you find in an audit, whatever conversations you have with the top management of the company or the higher authorities of the company, you note down in that register. That is audit notebook. Nothing jazzy, nothing fancy, nothing difficult about it. So audit notebook is usually a bound book which has large variety of matters observed during course of audit. Audit notebook is permanent record of the auditor. What are the matters which is recorded in audit notebook? Name of the business enterprise, organization structure, important provisions of MOA, AOA, communication with previous auditor. All these things are recorded in the audit notebook. So whatever you are doing during course of audit, all those things are recorded in the audit notebook. All those things. Then what is audit engagement letter? It's a contract between auditor and auditee. auditor and auditee come in a contact. There's a contract between auditor and auditee. This is audit engagement, and it's very, very important, guys. Fees should be written in audit engagement letter. When should fees be disbursed? This should be written in audit engagement letter. What are the restrictions and scope? This should be written in audit engagement letter. What are the areas which are to be covered under internal audit? There should be written in audit engagement letter. So many things are written in audit engagement letter. Objective and scope is written. Auditor's responsibility is written. Management's responsibility is written. So, for example, preparation of financial statements. Preparation of financial statements. This is responsibility of the management and not the auditor. Sometimes auditor, is faced with a situation where management is saying, "Oh, auditor, please make my financial statements also." No, why should auditor make the financial statements? Financial statement preparation is responsibility of the management. Then what are the inherent limitations of audit? Inherent limitations of audit is that we are doing sampling. So 100% accuracy cannot be expected from an audit. This is an inherent limitation, should be written in the engagement letter. Management representation letter, whatever management is representing on certain aspects, that should be written. Restriction and limitation of audit responsibility, audit fees, what should be the report, validity of report. All these things should be mentioned in the engagement letter. So these are the constituents of engagement letter. Then what do you mean by operational audit? Operational audit is concerned with the operations of the company. Waste, inefficiency, and excessive cost should be curtailed using operational audit. That is the ultimate idea. The performance is the main aim of operational audit. Performance should be done to an appropriate level. Performance should be good. Okay. So what are the operational audit objectives are? Appraisal of control. Operational audit should look at the controls, whether controls are working fine or not, whether they are working appropriately or not. Evaluation of performance, very, very important. Wherever productivity is declining, wherever efficiency is declining, there the performance should be evaluated by the operational audit. Appraisal of objectives and plans, whatever objectives company has set for itself, whether it is able to attain that objective or not, that is another aspect of operational audit. Appraisal of organization structure, whether the structure, the delegation of authority and responsibility, whether this is appropriately planned or not. Then what are the difference between internal audit and operational audit, guys? Internal audit is the objective is compliance. Operational audit objective is risk identification and process improvement. Operational audit is about process improvement. Internal audit is about compliance with law. Focuses on financial accounts and policies and procedures. Focuses on business as a whole. Aim is financial audit. Operational audit is related to efficiency audit. Financial transactions is the basis. Business processes is the basis. Monitoring, cost center-wise budget monitoring is done. What is the cost of any cost center? Performance and result monitoring is done. Thrust is policies, transactions, and compliance. Goals, strategies, risk management is the thrust of operational audit. All right, guys. So let's start MIS, Management Information System. What do you mean by Management Information System? Guys, Management Information System is a equipment, or it is a process whereby it is a reservoir. Actually, it is a reservoir of all the vital information which assists the managers at all levels to make effective decisions. MIS is a reservoir of vital information. It contains all the information that will help management in taking decisions. So, for example, your accounting software like Busy, Tally, or whichever accounting software you're using, that will act as a MIS for the companies, because that if the management wants to know what is the profitability ratio, what is the GP ratio, you will quickly go to your Tally and you will ask for the GP ratio. It comes in Tally very, very easily. So Tally can be a MIS. Tally is a MIS. SAP is a MIS. Okay. Or even a simple Excel sheet is a MIS. If in an Excel sheet you have maintained a profit and loss account, management wants to know what is the profitability, you will tell them using that Excel sheet. That is also a management information system. So whatever source management is gathering information for decision making, that is known as MIS. Now, what is the relationship between management information system and cost auditor? So the cost auditor needs to analyze whether management information system is giving right information or not, whether the content, quality, and source of information is correct or not, whether flow of information is correct or not, and whether correlation of information to decision is correct or not. So cost auditor needs to ensure that MIS is working fine in respect of content, quality, and source of information, whether all the information which is flowing to the management based on which management is taking decision is correct or not. If the source of information is incorrect, then guys, obviously management will make a wrong decision. Okay. So content, quality, and source of information should be correct, which is being derived from management information system. Flow of information should be perfect. So wherever the information is to be flowed. So if director A wants the information, but the information reaches to director B, flow of information is incorrect. So flow of information should be correct. Then correlation of information in the decision areas. The information should be correlated with the decision areas. That correlation is very much possible. So management information system and cost auditor has to be totally aligned with each other. MIS should be a key area of cost auditor as well. Cost auditor will also make sure that MIS work is working fine. All right, sir. Okay, now a very, very important point, guys. Very, very important. A 6 marks question will most likely come from this particular aspect. Okay. What are the points to be considered while conducting audit of certain organizations? So for example, hospitals. What all do we see while auditing hospitals? Okay. Similarly, what all would we see while auditing hotels? What all do we see while auditing educational institutions? And guys, what I've done is I have bifurcated the steps into certain standard categories. Okay. First, you have to see the constitution of hospital. How is it constituted? From which act is it emanating? What are the trust deeds which are there in case of hospital? Who are the trustees? Where does the fund come? Where does the expenditure go? Who audits this particular hospital? All these things are to be seen using the constitution documents. Constitution refers to basic principles and legal framework which governs the particular organization. It contains powers and duties which are conferred on the organization, and organization can operate on four corners of this framework. So in case of hospital, it has to be constituted under a charter or trust deed. You have to see that charter or trust deed. There should be a letter of appointment for the people who are responsible for doing work. Then examination of internal checks, internal controls should also be done. So constitution is checked. Then what are the sources of income? What are the sources of income of hospital, guys? Of course, patient bill register should be checked. Attendance schedule should be checked. Area of dues should be seen that there are no areas of dues. So all these things that needs to be checked. If there's any interest dividend income, then the investment register should be checked. Legacies and donations who are contributing to the hospital, that should be checked. Expenditure, where would a hospital expense its money? Obviously on medicines, on beds, on equipments, etc. So capital and revenue expenditure, it should be authorized. The capital and revenue expenditure should be authorized. There should be internal checks regarding purchases, issue of stores. Payment of salary should be made on time. Assets, with respect to assets in hospitals, what should be done? Physical verification of assets should happen. Depreciation, whether it is calculated properly or not, this should be checked. So guys, these are the broad heads under which all the entities audit will be done. So these broad heads, if you remember, then you will be able to remember the audit procedures of each of these heads. I will give one more example. Hotels. Okay. Now hotels is constituted using bylaws. What are those bylaws? That is to be analyzed. Then internal controls should be effective with respect to receipt, purchase, procedures, etc. We need to see the internal controls as well. This is the constitution of hotels. Then incomes, we need to check the cash incomes, room sales. Then we need to see the guest register, the difference between rate charged from the guest and standard room rate should be properly authorized. So if the standard room rent is say 8,000 rupees and you have given the room to the guest at 6,000 rupees, then this should be properly authorized by the person who's required to authorize giving off the rooms. Total sales reported, total bills should tally, billing should be done room wise. Then auditorium, banquet hall, if it is let out, what is the income from that? What will be the expenditures of a hotel? It is physical stock count. Stock will be the major expenditure. Stocks which are stocks of consumables, food, etc., etc. Paintings, decoration expenditure should be seen. Occupancy of visitor, foreign collaborator, commission paid should be seen. Salary and wages should be checked. Then assets should be checked in two forms: inventory or stock. Okay, movement and transfer should be checked. The assets must be logged properly. The person who's handling the assets should be trusted person to whom the key is given. Stocks should be seen. Physical verification should be done. So all these things are related to assets. Okay, fixed assets, depreciation schedule should be checked of the fixed assets. Then stock of edibles are adequate or not, this should be checked. Okay, so guys, again, same format has been used by me for all the all these organizations. Okay, same format has been used by me, so it will assist you in reading or revising or learning very, very efficiently and smoothly. Again, one more thing, students tell me that, sir, it is so bulky, it is difficult to remember. No, guys, it will not be difficult to remember. You just apply some logic. Don't try to mug it. Just apply some logic. Obviously, what will be the income of hotel? It will be through the guest. It will be through the legacies and donations. It will be through the banquet halls rentals. It will be through the restaurant food. What will be the expenditure of hospitals? Of course, it will be food. It will be medicines. It will be beds. It will be nurses' salary. It will be doctor's salary. It will be any other specialist salary, etc., etc. So these are all logic based audit procedures. If you read them thrice, then you'll be able to apply logic in your examination. And if you bifurcate the audit procedure into these 5 parts, like I've done: constitution, assets, then incomes, expenditures, if you bifurcate into these parts, you'll be able to remember them well. But mind you guys, very, very important, please understand, at least one of these will definitely come in the examination. At least one of these, any one of these will definitely come in the examination. So please prepare them very well. Read through them very well. Okay. All right, guys. So yes, this was the chapter on internal controls, internal audit, and internal checks. This chapter is very, very important from an exam standpoint. And since it's very, very important from an exam standpoint, guys, you should remember this chapter very well. You should do this chapter very, very well, because it's really important. And with this particular aspect, we finish our 5 study notes. 5 study notes are finished. Yes, I have included 2 study notes in these 3 study notes in my book. Net, these 3 study notes in my book cover your 5 study notes of your study mat. I've already mentioned the name of the topics which we have covered today. The study mat mentioned, it is mentioned in the description box. You can see that. But yes, this marathon will be sufficient for you to prepare your theoretical portion. And I've already told you that on my YouTube channel, if you go to the tab of playlist, then you will find, I'll show you. Please see this. Now you can see the YouTube channel. Yes, if you're new to the YouTube channel, please subscribe to the YouTube channel. I will never fail in saying this. You go to the playlist. You move further in the playlist. You will find a playlist of Cost and Management Audit. Okay. You will find a playlist of Cost and Management Audit. Yes, this is the playlist. You view the full playlist. And in the playlist, you will get the marathon videos of the practical topics as well, which is professional misconduct or the rules, the cost accounting standards. All this will be there in this particular playlist. These are the, and this best strategy of cost and management audit. This is very, very important video for all of you guys, because this video has got some insights on what are the important topics of your syllabus. So please watch these videos. Please watch the playlist very, very well. And yes, before we sign off, guys, please hit a like button on this video. Please share this video with your friends. You have 2 more days to go. Please understand that, now nothing is in your hands. Now time is not in your favor. Time is against you. Nothing is in your hands. So don't take stress. Students who are taking stress, students are saying, so we have CFR, we have BVM, SPM, we have GST, we have cost audit, we have so much to study. So we are absolutely confused and nervous and anxious what to be done and what is not to be done. So we are absolutely scared of the examination. Guys, don't be scared. Please don't be scared. Now the time is very less. Since the time is very, very less, therefore nothing is in your hands. So do whatever best you can and be chilled, be relaxed. If you're relaxed, if you're not nervous, if you're chilled, then you will be able to perform in a better manner. Output will be more. Your input output ratio will be more. If you're tensed, if you're nervous, worried, then your output will decrease to 50%. So don't be stressed. Now nothing is in your hands. Only 4 more days to go for your examination. Now everything is in God's hand. Now do whatever best you can and give the examination with full vigor. Pray to God that yes, I'll succeed. I pray for all of you. I give blessings to all of you from Delhi that yes, you all become CMAs in August 2022. Bless you. On that positive note, all the very best and happy studying. Bye-bye.